Yeah. Whoa. I speak. We change lives, Jesus. I speak.
Welcome to the TP Masterclass. On behalf of Cliff Cheqona and the entire TP family, we're honored to have you here. You didn't just join a live session. You stepped into a transformational experience designed to help you master your mind, align your emotions, and trade with clarity and conviction. We'll be starting shortly. In the meantime, settle in and prepare your notepad. Like the stream, subscribe if you haven't already. And most importantly, invite someone who needs this. Because around here, we don't just trade, we transform. Let's get started soon.
I speak life, I speak spirit, we change lives, Jesus did it. I speak life, I speak spirit, we change lives, Jesus did it. Step into my Monday, I'm stepping to my Monday, I'm stepping to my Monday. We change lives, Jesus did it. I'm stepping to my Monday, I'm stepping to my Monday, I'm stepping to my Monday. We change lives, Jesus did it.
What is the TP family, and how do you become part of it? Don't worry, if you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for Trading Psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple: education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
It's a mind game, you heard me. It's a mind game, you heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
Hi, TP family. Can everyone hear me? I hope everyone can hear me. I know right now you are seeing the Trading Psychology Masterclass live in Ghana. I really hope you guys have not forgotten that we are having a Trading Psychology Masterclass live in Ghana offline. We are yet to release the date, but we wanted to start off this stream by reminding everyone that we will be having an offline Trading Psychology Masterclass live in Ghana. So make sure not to miss it. Make sure not to miss it. I am just gonna yes. Hello family. Once again, I'm here live on TP Masterclass. How's everyone doing? Can I know how everyone is doing from this week going? How was your trading this week? Did you catch some pips? Did you blow your account? I hope you didn't. How has everyone been so far for this week? And another thing I wanted to bring to everyone's attention is that last week we only had 2 segments featuring Kema Trades and Cliff. Oh, someone said I lost a Profirm account this week. Oh, I'm sorry to hear that. I'm very, 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 very sorry to hear that you lost your Profirm account. And someone said I am doing a Profirm challenge. I'm so happy to hear that. And I really hope you continue to, pass your challenges and be able to trade live. Because Profirm accounts are really, they are something. But anyways, last week we only had 2 segments, which was Kema Trades and Cliff Cheqona. And it's not that we are changing the structure of the stream. We are currently just experiencing some technical difficulties because Willis will be back to continue with the habit formation segment. But for today, for this week, we are going to have 2 segments, Kema Trades and Cliff Cheqona. So please, guys, whenever you tune in and either session is going, do not click off. Make sure that you are staying till the end of the stream so that you don't miss anything that we will share with you. Okay? I hope you guys understood everything I am saying. But regardless, let us just move on to the stream. Oh, something is happening. Let me just bring it back. But welcome to another streaming for this week. And wherever you're tuning in from, just let me know right here in the comment section, the live chat so that I will know where you're tuning in from. If you're tuning in from Kenya, Ghana, Nigeria, Uganda, South Sudan, Namibia, Tunisia, US, UAE. I'm just trying to remember all the countries on top of my head. But wherever you're tuning in from, just let me know right here, the live chat. Also, we are continue to stream from Facebook and Instagram. So if you are right now on Instagram or Facebook, hello. I hope you are enjoying our TP Masterclass live stream. Oh, we also have someone from the Netherlands tuning in to our stream. Thank you for joining us. But yeah, wherever you're tuning in from, just let me know in the comment section, the live chat And also, if you're a first timer joining us for the first time, welcome to the TP Masterclass. I want to give you a big shout out for making the decision to join us for the first time to really transform your trading psychology and also your trading journey with us. And I hope this space becomes a very good space for you, a very safe space for you. So if you're new here, welcome. You are part of the family now. We call ourselves the TP family. So welcome. And once again, because you are also a first timer, you're probably wondering, oh, where do I start from? Where do I go to start off my journey? We have created a playlist on our YouTube channel. You just have to click on the channel name and then go into the playlist and then click into season 1 TP Masterclass and you'll find this video called What is Really Trading Psychology. That is the video I would like for you to start from and then watch every other video continuously. This video will really help you what the community is really about and how we have been able to help a lot of traders transform their mindset. And also, if you're a first timer, put in the live chat that you're a first timer so that I can also give you a shout out that you're first time and I will welcome you properly. Once again, every Monday to Friday, we have what we call the TP declaration. We post a picture with some very powerful words on it. And when you see them, make sure that you speak it over your life. Make sure that you are living it. Make sure that you are speaking it over your trading day so that you can trade with a clear mindset, with a clear alignment of your trading plan. You don't go off tracks from your trading plan. This is an example of how it looks like. We post it every Monday to Friday. Usually in the morning, it will have instructions in the captions of what to do once you see it. When you see it, do not scroll past it. Make sure that you pause and then you just speak it either 7 times or 3 times over your day in the morning, and then you just keep it moving. Just make sure that you don't skip it every time you see it. We also post it on our stories on Facebook and also on Instagram. So if you're on either platforms, you will see it every morning that we post it. Okay. Another thing is, wherever you are tuning in from right now, I want you to be mindful of your space. Yes, I would like for you to be mindful of your space, whatever that is going on around your space, your environment right now. Just take a moment to remove every distraction and to grab your notebook and your journal or whatever you use to take notes. Grab that tool with pen or pencil or marker if that's what you use. Make sure to grab it and make sure that you are taking notes. I would like for everyone to participate in today's masterclass because every week, Kema and Cliff and Willis and the TP Market Watch, we always share powerful information to the community. So make sure that you are not missing it. Make sure that you are taking notes. If you have to even screen record some sessions or some part of the TP Masterclass, make sure that you do so that you can always revisit back to it and you are not missing any information, okay? Because you never know, that is that particular information that will truly transform your trading journey for you. Another thing that I want you guys to be also mindful of is to respect this space, because we have spent so many weeks and months since the beginning of this year to really make sure that this space is as safe as it can be for a lot of people that always continue to tune in into our TP Masterclass, okay? So make sure that you respect us, you respect yourself before, and then you respect us, and then you don't comment anything that will distract other people. Keep your comment as educational as possible. Do not say anything out of the ordinary that does not align with what we are doing here on the TP Masterclass. Yeah, I think that's everything that I need to let you guys know. So without any further talking, we're just going to jump into the segments now. And wherever you are, just be attentive from here going and make sure that you stay tuned for more. Thank you, everyone.
It's a mind game. You heard me. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
Hello, hello, wonderful people out there. Hello, once again. It's another wonderful Saturday evening. Wherever you are, I salute you all. I can see people from Nigeria, people from Botswana, Netherlands, Cameroon, Ghana. Welcome, welcome so much to the TP Masterclass once again. Traders Mindset, yes, welcome. All right. Great things that we are bringing to you every single week. It's been a wonderful. This is the 36th, episode of TP Masterclass, and we have done so much. We have talked about so much, and trust me, it's helping a lot of people out there. We are getting testimonials on every single day, from people. And it is very, very refreshing to see how it is helping, or some of the things that we talk about is helping a lot of the traders out there. I am glad to be a part of this initiative. And I am here once again to talk about something really, really interesting. I bet you're going to love it, right? I bet you're going to love it. And so, if the team is ready, you can bring up my slide and then we can move on. Great. So guys, in every single, time we are trading on the market, there are a lot of things that we basically have to look out for. And some of these things, might come to us naturally. Some of these things might not necessarily come to us naturally. We would have to make the necessary effort to be able to derive the skill and be adept at what we are doing from time to time. All right. And therefore, that is why TP Masterclass is here. Sometimes we talk about the edge, which is my segment, trying as much as possible to equip you with the necessary tools, with the necessary ideas, with the necessary things for you to be able to implement on the market in order to make sure that your winning streak is more than your losses on the market. When Shells was talking, thank you so much, Shells, for that wonderful introduction. When Shells was talking, I heard that she mentioned that someone had lost a Profem account. You see, this is some of the news that we want to hear less and less of. I've lost my entire trading account. I've lost, a Profem account that I was actually handling. And then we sit back and we ask the question, okay, so how exactly did you lose that particular account? Because, in this week, I've had 3 different individuals passing their phase 1 and, phase 2 of their Profem account. So then begs the question, why is it that other people are losing and then other people are actually doing well to pass their Profem account? All right. This week, we had some people who passed their Profem accounts and then did not, ended up not getting, the way forward or not being, passed on. And, I know that most of the individuals who are in the trading community who are listening in have seen a few of the people come out and talk about different prop firms out there who are bringing in rules that, nobody knows about. And then the prop firms also rebantering, it's all a whole chaos. But at the end of the day, trust me, once an individual goes into the market with a certain kind of mindset, it's very, very difficult for even some of the rules that they set to even, get you along the way. So, let's go into this region. Prior to this particular area, today I'm going to talk about point of interest in the market. But prior to that, that's why I'm even pulling up this particular chart. This is the gold market. And for most of you who know me, you know that I trade the gold market, significantly, right? Majorly. I trade a gold market. It means my major pair, major assets that I learn about, I try as much as possible to well abreast about in terms of news, geopolitical happenstances and all. I basically watch this. So I'm constantly looking at news events and then anything that can actually affect this particular asset, all right? So that I will not be taken by surprise. Now, at the end of the day, I'm able to get some very, very good trades within each week that comes. I handle every week at a day, at a time, a day at a time within each week. And trust me, there are some weeks that definitely, is going to be a lot of, stress. But there are some weeks that, market just unravels gradually in your direction and then helps you to be able to get the best of trades. Even if they are not the best of trades, sometimes you might definitely get some few pips of the market. And I tell people that if market is moving from A to Z, you don't necessarily have to catch from A to Z in order to be profitable. Sometimes your trade from maybe B to F could give you the profit you are looking for. Someone will also get maybe A to C. I hope you understand. So at the end of the day, it is your criteria and then your understanding of how the price action is actually coming, or the kind of tools that you use on the market for those who use indicators and stuff like that to trade, right? that would make sure that, okay, so you are in on this trade and we are all going the same direction. I hope you understand. So no matter what strategy that you're trading, at the end of the day, when market takes a particular direction, pray that you are a part of that particular direction and you are actually what in that particular profit space or making profit along the way. These are a few of the trades that my team took this particular week, and you can see 4 different trades. On Monday and Tuesday, there were no trades that like were brought in. And trust me, even the Wednesday, Thursday, Friday, some of the trades that came in from the team surpassed those 3 days, surpassed most of the trading weeks where we have traded Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, I hope you understand. So even 2 days in the week can actually make up for so much, than some weeks that you are actually trading, the whole amount of week. And then the question, that now will come in that, okay, so how is it that some people are able to clearly get some very, very good trades on the market and other people are just, you found struggling on the market from time to time? All right. And that brings me to my topic for today, which is basically going to be point of interest. So I'm going to talk about the topic of what? Point of interest. So if you see this, you realize that significantly, every single trade has an area that it was picked up. And there is a reason why, or a criteria behind each of the trades that came in along the way, right? The first trade that I picked within the week was a break even. We were thinking that price would actually go on a bullish. It wasn't necessarily bullish, it was bearish, but we saw through it quickly for an invalidation for us to jump off the market and rejoin that particular position for the downtrend. So the team actually jumped in for that particular sales. And it was great to see them, actually win along the way. The second day, whilst price has hit the target point for the first day, we saw through and then we're looking for price to continue towards the upside. We got some few pips on the market. And then Friday we came in with some good 380 pips. Now, how exactly did these trades come about? Then I bring you into this area where we will be talking about what? The point of interest in the market. There are sometimes that an individual chases the market for every single entry that they are looking for. People are struggling, opening MT4 and then just triggering trades based on anything at all. Price is going up, let us jump in. Price is going down, let us jump in. Emotional roller coaster and all. People are making different decisions based on different things altogether. But there are very few people who understand that less is actually more on the market. Sitting back and allowing the market to unravel gradually into an area that you have actually pinpointed as your region of interest significantly will put you among the people whose edge are constantly growing, bigger and bigger on the market. Edge for winning are growing bigger and bigger on the market as compared to their losing streak on the market. I understand. So you agree with me that if you really, really want the best trades in the market, it's not just about coming into the market to do anything at all, but it is about what? Certain areas in the market and then following through those particular areas when price gets into those ranges, which means that overly, most of us would basically have to sit back and then watch the market do a lot of chaff until market actually reaches that particular area of interest that we have pinpointed. Then we will now come into the market to make a decision. It means you'll be sitting on your hands for a very long time. And that is the most important aspect of trading. And that is the aspect that a lot of people neglect. Sitting on your hands and waiting. People do not have patience to see through for an actual move to happen on the market. So constantly, even when market is trying to get into your area of interest, you are in a hurry to pick that particular trade. You are in a hurry to jump in on that trade. You realize that when you jump in on that trade, sometimes your stop loss might not necessarily be able to accommodate that particular move, right? Let me take you back to the chart and let me illustrate something very quickly for you all right? Take, for instance, if you are entering a particular trade, right? Or if you were looking forward for market to come into this low region, just to tap into that particular low region as a demand area where there is the necessity for price to come into and the probability for price to move out of that area. You are looking at that area and price is gradually coming towards that area and price gets here. All right. And then price begins to reject off gradually. And you jump into that particular trade for a buy because you know that, okay, so definitely price is supposed to go on a buy, right? Most people make statements like that. Now, it is up to you to put the stop loss where it needs to be and not where you want it to be, because they are entirely different. Where you want price to be as your stop loss is entirely different from where price needs to be as the stop loss point. All right. So at the end of the day, this is supposed to be, or the low point of this region is supposed to be the best area for what? your stop loss. Because even if price taps into this area, your idea is that particular demand region is there to stop price from dropping further towards the downside. The idea of a demand and supply region is that we have talked about it previously, but I'll just explain it here. Resistance and support. Support is any area in the market where price was prevented from moving further towards the downside. If price has been prevented from moving further towards the downside first time, there's a high tendency that it could happen again when price is coming there. That's the idea. So when price is coming in there the next time, you know that, okay, so this point might probably shield us from dropping further towards the downside. I understand. There are times when we have minor demand zones and minor supply zones along the way, which we will talk about subsequently. Now, once price gets into this area and you are in this trade here, it means that you have to have about 200 pips to accommodate that particular trade. Now, the question is, can you afford that 200 pips? So nobody's saying it's wrong to enter around that area. But the question is, can you afford that 200 pips extra drop towards the downside? That if market drops further about 150 pips, can you afford that particular trade staying in there and being in there? And most of us, why we blow our account is, once we have entered the trading and price is still dropping towards the downside, we end up adding positions because, like we have a directional bias and we know, and we are true to that directional bias. But because we have entered so early, it's still, very risky for us. And so market keeps going against us. We keep adding positions. And there are individuals who call something the martingale layering. They keep on adding positions until price moves towards the upside. And there's a skill to even applying that particular skill. So if you do not, and then you neglect that particular skill that, you need to understand in applying that martingale layering on the market, you will end up, averaging your losses instead of averaging profits in the market, right? Adding to positions when you are going deeper and deeper into losses. I understand. And before price will actually unravel gradually into your direction, guess what? You would have already hit a loss or lost your trading account if you are over leveraging on the market. And that is something that we don't want to hear. We want to hear less and less of I have blown my trading account, I have lost my profit account. We want to hear less and less of that, right? So let's go into this area. So with this illustration, you can see, okay, market structure, up, down, up. We are saying price is coming down. If you are anticipating a bullish momentum, what we are saying is when the pullback is coming, you need to have an area where you are waiting for price to come into. And when price rejects off that area, now we will be looking forward for the continuation towards the preceding price action, which in this case is what is bullish. So that area where you are looking for price to come into is what we call the point of interest. So now let's go in. So never chase the market again, build a trap, wait in silence, and let price walk in. Once you're able to do that, trust me, trading will change for you. Your trading game will change for you. You'll be like a sniper. Do you know why exactly we tagged that particular strategy as sniper entry? When we say sniper entry, we are basically saying you caught the turnaround of the market, whether it was continuation point or it was a reversal point, you caught that particular area to the T. And why? It is because you ambushed price, or most of these individuals who are able to get such a trade, ambush price around that particular area because it was their point of interest. They waited patiently for price to get into that region. And once price got into that region, they took advantage of that particular knowledge that they have in entry and exit on the market to be able to jump in. So point of interest, basically a pre-selected zone that aligns with a trader's confluence for execution. So at the end of the day, what exactly is your confluence for execution? At the end of the slide, I'll list a few confluence that you can be able to use in order to help yourself whilst trading in the market. In a point of interest, we lay ambush for price patiently, logically, and with little or no emotional attachment to that particular region. It means that you can actually have a point of interest in the market. Price will come into that area and break beneath that particular region, and it should be okay. You should have a different area. Why? Because market is not about certainties. Market is about probabilities. Entries are about probabilities more than certainties. So you're not saying it should reject off this area. You are saying that there's a possibility that market may reject off this area. And so when price gets into that region, we have two main kinds of entries, which I'll basically talk about as well. All right. So now let's get back into this area and let's move on. So no emotional attachment. You only be emotionally attached to an area if, like you are an individual who is basically saying it is do or die. If you don't turn around in this region and yet, take me out or blow my account. How do you understand? And as I said, we want to hear less and less of that. That is why we are teaching you guys to understand that in the market, probability works more. Knowing that, okay, I have two areas. Market may use this, or if it does not use that region, then I'm going to look at this area. If it does not use the second region, then it means that, probably we have had a turnaround of the market. And I should be able to understand and look out for what? A trade that is going to go the opposite direction. Once you are able to identify that, trust me, you would be able to sideline yourself from that, group of people who are basically looking at a particular direction. And if market doesn't go that direction and is turning around, they are still placing trades towards that particular direction. All right, you should be able to know, okay, here I've probably seen an invalidation. Okay, here I've probably taken a loss towards this direction. Market has broken beneath an area. It means that, we might be looking at price going against the direction in which I'm looking at. So why not look for a trade that is what? Going against my previous direction, and then what? Recover my trades or make even more profit on the market, rather than staying true to a direction and unwavering about changing your mind, even when market is killing you and hurting you. I hope you understand. So let's move on. Okay, so that this is the philosophy of a point of interest. We don't trade reactively on the market, right? I wanted to use a different word altogether, but it looks like I still have to use reactively, right? We don't trade reactively on the market. POI, or point of interest, is your technically assumed entry. It means that you must have thought of it, premeditated about that particular zone. So if you realize I've written specific premeditated zones based on logic and narrative. It means you don't just wake up and then say, oh, this is my point of interest. No, what makes that particular region your point of interest? There must be something to that particular region that makes it your point of interest. And if, like you're able to make sense of it, trust me, your edge goes from 20 to 40, from 40 to 60. And it goes on and on like that. Because now you are determined for that particular area because of ABC. All right. Now, for instance, if I came into this particular market space and I said, okay, on the 4-hour time frame perspective, this is what I'm looking out for, right? Now watch this. This is what I'm looking out for on the 4-hour perspective. Okay, there's price here. I'm seeing a falling wedge formation. Now, I'm asking myself, if falling wedge formations happen on the market, falling wedge formation is a chart pattern. If falling wedge formation happens on the market, it means that we had market going towards a particular direction like that. And then now we are having a retracement against the direction in which was what price was moving in the first place. And after price has accumulated, after that period of accumulation, we are going to have that breakout. So the concept of falling wedge is after the breakout, we look out for what? Retest for entries for continuations towards the upside. You understand? So the moment you see that happening in the market, your goal is to be able to get it on the what? On the retest for an entry, retest, confirmation for an upside, and then jump in on that particular trade towards the upside. So every time you see that particular movement in the market or something similar to that particular, movement of falling wedge formation coming in on the market, guess what you're going to do? You are quickly going to look for how you can be able to capitalize on that particular movement that you are having currently. And you always have in mind that, okay, when I see that breakout come in along the way, what you basically mean is that I should be looking out for what price continuing in that particular direction. So here, if I see price reject off and then start coming towards the downside like this, and then I see price do this around this particular area, what is this? That is a falling wedge formation. Price is coming from the lower point, going all the way to the upper side. It got to this region and we had that retracement coming towards the downside. Now we have a breakout of the region. We are waiting for retest of that particular lower region and then what? Continuation. So when you see market gradually unravel into that particular area of interest, guess what you're going to be doing? You're going to be looking out for any confirmations that says that, okay, so now price weakness is what? Shifting from sells back into what? Buys. And now let us look at continuation of the trend after the breakout of that particular chart pattern that I've seen along the way. So you have an area where you are waiting for market to come into, and you patiently wait for market to get there. And based on your criteria, you now jump in on that particular trade towards whatever direction. And every time you see that thing happen in the market, guess what is going to come into your mind? Okay, it might be probably the same thing that is happening again. So you know what I'm going to do? I'm going to basically watch price as it keeps on doing that up and down. And when it breaks out of that region, I'm going to start looking out for how exactly I'm going to jump in on that trade. And over, you will see them happen in the market. I'll be understand. So coming in here, we are saying that it's specific, it's premeditated. You might have thought of it. Okay, what exactly is making me look out for this particular trade? Oh, there's a breakout of this falling wedge formation. After that, price is coming back towards the downside. It must be coming into this particular specific region. Let me wait for it to get there. And when it gets there, it's not just about, okay, you are there, so let's trigger. No. What is my entry criteria? Why exactly should I enter in this area aside it just coming into that particular region? I'll be understand. So each point of interest is a story in price, a place where others were likely left behind. So where there were sort of consolidations or stuff like that in the market, where price, like probably was moving towards the upside, and then you realize that, okay, so there was what? There was some sort of rejections along the way like this, left behind demand regions like that. Okay, price may come back, and when price is coming back, it may come into these regions. These regions are what you hear people call order block regions and all. I call them simply demand regions for when we are coming towards the down to grab them, and supply regions when we are supposed to go to the upside to grab liquidity in those areas. So minor demand and supply regions is what I call them, and it's basically because I like not to confuse a lot of people with different meanings. But if I explain to you, basically you realize that it is the same as what we call the order block. I'll be understand. So at the end of the day, I'm saying if price misses this particular area, then which other area might I be looking out for such an entry at? Okay, if price misses this area and then breaks beneath that area, then probably the next region I'm going to be looking out for is 3690 area for a rejection. So when price gets there, now the next thing is, let me see if I would see any Q that gives me what? An entry criteria for me to now jump in on that particular movement back towards the upside. I'll be getting. So that is the significance of point of interest. It comes with a story. I'll be getting. Where liquidity was engineered and will be revisited. So for instance, if I am looking at price like that, right? There are times when you would be looking at price and you realize that we have price shifting like this, go towards the upside, come towards the downside. Price moves up, gets into the high point of this area. Guess what I said earlier? Wherever price rejected the first time, there could be the high probability of whatever rejected price to be sitting there to reject off price again. So, up, down like that. Let's say after the up, down, short period of accumulation, price breaks out of that region, right? Price breaks out of that region, and then we have, okay, price move towards the upside like that. There's a high tendency that sometimes when price is coming back towards the downside, it could use that particular high point that we have around this area as an area of interest to retest this particular resistant area that was broken through, and use that area now as a support in order to start that particular new move that we are seeing in the market. I'll be understand me. So it could use that region as a point of interest. So we mark that region and we say, okay, if price gets into this area, I am going to be having a keen eye on what exactly is going to do around this area to see if there's going to be any weakness in the drop that we are having and any strength or communication of strength for buys instead. And I'm going to jump in on that trade, which means that you should be able to have an entry criteria aside looking out for what point of interest in the market. You should be able to have what? An entry criteria. So where imbalances scream for rebalancing, where demand and supply zones sit, just like what I explained right now. The goal is not to be everywhere on the chart. You are placing trades everywhere. No. From today, I want you to tell yourself, I am not going to be picking trade from just anywhere in the market. Do you go into the market to buy a phone and you just buy it at any price? You just get to the shop and then you ask, okay, so how much is the new iPhone 17? And they say, oh, 40,000 Ghana cedis, right? Which is relatively going to be somewhere around $2,800, right? $2,800. Then you just remove funds and count and then give it to them. You don't do that. You don't just buy. You need to understand where is the significant price, at least a range. Okay, people are selling it for 24K. People are selling it for 23K. Some people are selling it for 22K. So even if averagely I'm able to get it around 23K, it is okay. So you go in there with a preconceived what? Idea about the price in order to get it from that particular level. And once you get in there and then you start hearing 28, 30, guess what you're going to do? You're a buyer. You are going to negotiate to see if you can get it back down to what? 24. It's the same thing when you come into the market. Price might be at a high price where you know that this particular price of this at this particular current level or time is not matching, and therefore we should be able to look out for that particular reduction coming into a soft space for us to be able to capitalize on that price. All right, so the goal is to be in the right place at the right time and only there. All right, until price gets into that particular region, I tell myself I'm not going to enter the trade. So one of the things that I have as a criteria, right, is this. And I love how Clifford has been always commending and saying, you know, Kema, when it comes to your discipline on the market, it's impeccable, right? Yes, I built it over time, right? I built it over time. Now watch something. If price pushes towards the upside and I have price, you know, like come towards the downside like that, shoot towards the upside, down, up, everybody can see that the structure is bullish. And because market has already been printing out something, if you see price come down like this, most people or most of the individuals participants are going to be looking forward for what? Continuation in the market. Now guess what? Some people start entering the market from here. From here, when you're going to be seeing this, one of my criteria is when I identify my swing low and swing high in the market, until market breaks the 50% region of that area, coming into that region, I'm not going to look for an entry. Did you get that? So I'm looking at this as a middle area of 50%. So let's say a fib, 50% fib retracement. So people who use the 38.2%, I'm saying that until price comes into the 50% and drops beneath the 50%, I'm not going to be looking out for an entry. So price has to dip into the 50%. Probably sometimes it just taps on the 50% and leaves. Sometimes it dips into the 50%. And this is where I start looking out for my left behind demand regions to what? To be able to say, okay, so this is my point of interest, number one. That is my point of interest, number two. Now I'm waiting for price to come in here first. When it gets there, let's see how it unravels. If it doesn't give me the entry that I'm looking for and it breaks beneath that area, I have a second area. And that is what probability is all about. There's a probability that it might use the first area. If it does not use the first area, then I'm going to wait for it to tap into the second area for me to look out for my entry in that particular region. And guess what? You have an invalidation because most of us know that in market structure, the moment market breaks this region downward and closes beneath that area, the trend has what? Just been communicated that it is about to change, or it's what? Change is impending. I understand. So now, in subsequent times, we are going to start looking out for sales coming in on the market. So until market breaks this region, your idea is what? I am looking for buys in this area because market just traveled into the strong regions of that particular bullish momentum that we are looking out for. In subsequent sessions, I'll take my time and I'll talk about market structure for us all to be able to what? Understand it really, really well. All right. So that is the goal. So to be at the right place at the right time. So please, wherever you are, tell yourself this. I'm not there. You are the one who is there. Just like how I can give a signal and I'm not there. You are the one who plays the buy or sell. So I'm giving you a signal. Place a buy or sell on this. All right. Tell yourself, I am not going to pick trade just anywhere in the market. I'm going to look for specific regions and I would wait until market gets into that particular area for me to trigger that particular trade on the market. When you do that, you realize that you will sidestep so many of the losses that you take unnecessarily in the market. And even though this is unconventional, trust me, it has helped me to sidestep so much of the losses, in the market. in the long time that I've been trading in the market. This is what actually came in for me to sidestep so many of the losses. Just wait for market to come into an area that is designated for your entry and just what? Trigger. Now let's go in here and let's look at common entry mistakes. Then we'll look at what? Remedies, and then we'll be out of here, all right? For Clifford Cheqona to take over, all right? So forcing a trade in the middle of a range. For instance, just like I was explaining, price is coming down. It's not yet in your region, but sometimes that's what we call inducement, right? I'm not going to go deep. I don't want to go deep into those areas. Sometimes you have an area of interest where price, you are looking at price coming into, all right? You have an area of interest that you are looking at price coming into. Price is coming into that particular region gradually, right? And you can bet on it that, oh, this one is going to get there. Then price gets somewhere here. Then price begins to do this. This thing has gotten a lot of people, right? Price begins to do this. Then a lot of people are like, trend is changing. So they see break out of this region, come and see people. Buy, right? Buy now, buy now, buy now around this area. We are going to the moon. Then guess what? Price just dips into this region, picks this particular area. Guess what? So the entry that you had around your area, which is here, was the entry all along. You just had to wait for market to come into that region. But because of this area of accumulation, a lot of people, feel like, this accumulation simply means, market is going to go towards the upside. Okay, you know what? Let us go. Let us go. And then they end up what? Getting hit out of their trades. Market goes their direction. Do you know the excuse for a lot of people who this happens to? Market has manipulated me. So a lot of the things that people call manipulation on the market are basic price action that they missed out on, and not necessarily market manipulations. And when I saw through this, trust me, it helped me a lot for me to sit on my hands the more and wait the more. So much of my trading is about waiting. Much of my trading is about waiting and a few times executing. And those few times that I execute on the market, trust me, it most of the time gives me what I am looking for in the market. All right. So entering based on emotion, not structure. So a lot of people, hey, everybody's entering. Oh, then you jump in as well. Then you realize that, it was all a facade, right? You don't want to be a part of the individuals who are entering the market based on emotions. You want to be a part of the people who are entering the market intentionally. Entering the market intentionally means it's based on something specific that you have seen that you are entering the market, and you have it penned down in your strategy. All right. If all of these are not penned down in your strategy, it means that it's not, and the entirety of it is not yet there. So there are few touches that you need to put along, or there are few jackets that you need to wear that particular strategy for it to take shape and be that strong. I'll be honest. So it doesn't mean that the strategy is bad. It just means that there are few things, few ammunitions that you need to add to yourself as a soldier for you to be able to be confident when going out there. Ignoring macro perspective. Sometimes 4 hour might be clearly telling you that, okay, we are going bullish. But because 5 minutes or 50 minutes is saying bearish in a moment, you forget yourself and then you join in on the sells and then be looking for some sort of swing setup from that particular movement on the market, when you clearly know that the higher time frame has a direction and that direction may be resuming very soon. So some people end up getting stuck in trades going against the direction of the macro perspective, and because of that, they end up taking losses, and you should not be a part of such individuals. Misplacing SL too tight or even too wide, like too tight, getting wick. Some people use 10 pips. I advise my students, please, no matter how close that particular trade that you have gotten is to the low point or the significant area of where you can put your stop loss, please allow an extra room of at least 20-30 pips, right? So I never set any stop loss on gold that is less than 50 pips. It is either between 50 or there are times when I even set 100 pips SL on gold because I know that pair. You understand? I know that pair. And guess what? Sometimes I end up setting 80 pips stop loss on gold, and price just comes 5 pips, 8 pips, 10 pips in drawdown and rallies towards the upside. Does it mean that I should set 15 pips as stop loss? No. The next day, I'm going to do the same thing and repeat the same process. I understand. Trading multiple points of interest at once with full risk is also one of the things that a lot of people do, especially during news trading periods. News can spike and come and tap into your point of interest, but sometimes you must be very careful because you might have 2 or 3 point of interest, where you are waiting for. That if price doesn't use here, it may use here. If it doesn't use the next region, then I'm looking at it using it. And sometimes this might be based on confirmation. So if you don't get any confirmation in your first point of interest, guess what? It means you did not enter any trade. Second point of interest, you did not enter any trades because there were no confirmation. But third point of interest, you got a confirmation and you entered. But guess when news is bringing in, you had set a limit or you entered a trade, the moment price got into that region because of the news, it takes your trade, takes your stop loss, goes into the next region. Guess what? They instantly place another trade, and then it goes into the next one. You're just basically, like not following your rule. There is a way to follow the rule. So the rules are set, but there is a way that, right? There's a way that you need to also follow that particular rule. I understand. The fact that food is supposed to go into the mouth does not necessarily mean you just have to shove, any amount into your mouth. I understand. All right. So entry checklist that I have put together, just something small to help some individuals on here. Is this POI within a premium or discount region? Right now, when it comes to the concept of premium and discount region, we are basically talking about points where buyers and sellers would take position. So if, for instance, today I'm doing a lot of illustration of the market, right? For instance, if I'm having price move towards the downside, so we have lower low, lower high, then lower low, lower high, right? Right. And then price is beginning to move towards the downside like that. The idea is the moment price does this and price begins to do this, I'm having the idea that, okay, you are probably going to pull back. So the two extremes are my swing point A and then B, where they started and then where it ended. So when you are using the fib, just like you're using the fib. So with the fib, you are basically going to say, okay, 50% of the region, just like I was saying, should be triggered before I enter this particular trade. So here's 50% of the region. Take this off. Okay, 50% of the region. So if you don't get into the 50% of the region, I'm not going to start looking for trades. You can get here and start selling off. I'm not in that trade. That's me. I am not in that trade. It's just my criteria, and I'm not going to be in that trade. But the moment you enter this particular region, guess what? I'm definitely going to be in that trade when price begins to move towards the downside. I understand. Now, these two extremes that we have, the upper part is what we call the premium region. The upper 50% is what I call the premium region. And then the lower 50% is what I call the discount region. Discount region. Now, the idea is this. Two participants are in the market, right? Just like a market area, right? Now, these two participants in a market area, if you are a buyer, you have a kind of mentality. Your mentality is that you want to reduce the price that you are going to be given. So a buyer goes into the market with a reduction mindset, all right? Even Elon Musk, when he was buying Twitter, he asked for reduction. Go and ask, all right? So the idea of a buyer is to look out for what? To look out for reductions in the market. You need to reduce price. The idea of a seller is to sell it as high as they can to make more profit on the market. These are two different mindsets that these two participants are having. But guess what? These two have to come in agreement for that particular transaction in the market to come in play. If a buyer and a seller have not come into an agreement of, okay, this is the price I want to give to you. Okay, I'm willing to receive it at that price. Transaction has not been created. You understand that? So if here is a premium region, it means all sellers are to look out for what? To look out for trades. When price gets into the upper area, it's an interesting region to start looking out for the sales. How we get it? At least until price crosses your invalidation point and you know that, okay, now we have totally turned around, this particular region, we have totally turned around. Until price crosses that area, you know that, okay, the structure has changed. We are not looking out for buys. But until that happens, this whole area is where your sales are sitting for continuation towards the downside. And for buyers who are looking to enter the market based on the weakness of the sales from this region, because this region is a weak sell area. Now you have wondered why you would be looking at bearish momentum, you will still sell and you still make a loss. It's basically because you are entering the sales on that particular trend going towards the downside at weak sell points. So this area is a weak sell point where you are jumping in for sales. Market will just take you out, and later on when it has gone to confirm, it will come back and then drop down, right? So these areas which are weak sell ranges can now become what? Strong buy areas where individuals can pick buys, but just buys that will bring them into the selling region here for them to start looking out for the sales towards the downside in continuation of the what? Of the trend, the preceding price action that they are looking at, right? So if you have an idea like this, you know that, okay, so this is where I as a buyer, I should be waiting for price to come into. Oh, this is where I as a seller, I'm supposed to be looking at, like price coming into before I even think about what? Triggering a trade. So buys, the moment you see pullbacks coming in the market, but you need to be very, 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 very skilled at picking this kind of trades for buys. That's why I like the continuations where price will come gradually into this region and then unravel, like towards the downside. When I see the confirmation, I jump in on that. All right. And if the buys also take, 10 by breaking and then we start going, now we can basically join in and go, right? But these ones are very, very risky. So I will call these ones B setups, right? Where you are taking a trade against the trend, but that it's based on the weakness of this area for the pullback, to bring you into a region like this. All right. Okay. Is there a clear structure and a demand and supply zone? A clear structure would make you be able to see, where exactly your swing lows and swing high is, so that you can be able to pick your equilibrium, so that you can be able to know where premium and discount is, so that you can know where you can position yourself as a seller and where you can position yourself as a buyer. All right. And then also, if you have clear demand and supply zones, you know that when market gets there, there's a high tendency for rejections. All right. So is there a clear structure or demand and supply zone that you are looking at price rejecting of? And what exactly next are you looking out for? Are you choosing risk entry or confirmed entry? These are the two main kinds of entries that we have in the market. And so if price gets in here, there are individuals who are basically going to say, I'm going to jump in straight because I've seen price do this and I'm selling here and I'm putting my stop loss here, right? That's a risk entry. For confirmed entry individuals, they are basically saying that, okay, so when you get into this area, there is a high tendency that you may be continuing, and we don't know. So the only way we are going to jump in on the sales is when you show clearly that rejection or that confirmation that you are starting the movement towards the downside, then we will join in on that. And that could be based on candlestick patterns and formations, chart patterns in the market, demand and supply analysis, top-down analysis. It could be based on several technical tools that we have in the market as well. All right. Yeah. So choosing risk or confirmed entry is also, another skill in the market. For risk entry individuals, they refine their trades. We will talk about entries and exit later, where we'll talk about how to refine entries in the market, and then that would help a lot of traders. Has structure shifted on a lower time frame? You need to be able to take a look at that as well. Sometimes structure will shift on a lower time frame, and you might not necessarily have noticed, and so you just basically be trading a particular direction, and then you end up losing out on some very, very good moves on the market. For example, those times when you have entered a trade based on the fact that lower time frame is showing that, okay, I'm going here, then you enter that trade, price will give you about 30 pips, 40 pips in profit, and you are happy about it. Then price turns around, and guess what? It goes 400 pips down. Right? It means you took 40 pips as profit, which is great, right? 40 pips, great. But you could have had 400 pips if your eye was on the market and how exactly the structure is shifting. And is SL placed rationally or emotionally? Are you placing your SL based on how emotional you are about losing a particular amount of money on the market? Or you are placing your trades, your SL rationally based on specific regions, based on specific criteria in the market. You are not meant to trade everywhere in the market. You are to trade where the odds are preloaded in your favor. And that is one of the things that I will leave you for this particular week. Thank you so much. My name remains Emmanuel Napo Ado, popularly known in the trading space as Kema Trades. Let's see if there are a few questions that are in here. Just 1 minute to go through, and that is basically it. Okay, I'm not picking trade from anywhere in the market. Silas, that's great. I love this masterclass. Mark Wood, that's awesome. I'm not picking trade from just anywhere in the market. Blessing, may it be so for you. And basically, I celebrate grace. That is great. That is great. Thank you so much. Kara says, I'm from Namibia. Awesome. You are so welcome to TP Masterclass. Who else? Well, texting from Ghana. Okay, Ghana, we see you. Where are you texting from? Okay, great. So that's lovely conversation between the whole team. Nelson says, Schema Traders, I really understand your presentation. With hearts, big up. Thank you so much as well. Thank you, everyone. I'm signing out now. I'll see you, God willing, next year. I'm handing over to Clifford Cheqona.
What is the TP family, and how do you become?
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game.
Hi guys, my name is Ronald Wacky Tupas. I'm here in Arizona. I work here as a teacher. Some of you may actually recognize me. I am the guy in the over-leveraging short film in our TP family. Back in the Philippines, I'm actually a professional film and television actor. But one thing I will tell you, those emotions were actually based on real events and real things. Back then, I would have all these indicators. I would have my edge. I would have my strategy. I would have my game plan. But when I came trading in the chart, something didn't go my way, and then I would revenge trade, and then I would over leverage, and then eventually I would just lose a lot of money, blow the account entirely. Spent so much money in evaluations that if I added everything, I probably would have a live account with a very extremely big buffer. It was so much money. And then over time I realized, you know what, probably my problem was not my strategy, my indicators, all that stuff. Probably my problem was my mindset. I started researching on psychology, and that's when I came upon Cliff Cheqona and the TP Masterclass. I saw him in one of his interviews, and I remember thinking, man, what he's saying just makes sense. I saw the masterclass. I started back watching the other episodes about trading psychology. I even did the affirmations before the trade, after the trade. The more I binge watched, the more I studied, the more I took down notes, I realized that I was feeling a little bit more calmer. I was holding my trade much longer. I was not blowing my accounts and semi-profitable. Eventually, I was able to secure a consultation with Cliff. And man, if you are able to secure one of those, please do, because Cliff is such an awesome, wise, intelligent man. Everything that he's been telling me is not only affecting my trades for the better, but also my personal life for the better. In one of our consultations that he told me, there is life after trading. You see, back then, when I take a trade, if it's a good trade, I'd have a good day. If it's a bad trade, then I had a bad day. And he told me that if I took a trade and if I cannot be present, talking to someone, like talking to my family, talking to my son, talking to my class, is the wrong trade. And that's not the right way to trade. I started doing adjustments, and now I feel more calmer. I feel generally much happier, whether I win or I lose, not affected by it anymore. Thank you, Cliff, for the work that you do. You're awesome. Thank you for the God wisdom that you have for helping people. You are heaven sent. I also want to honor and thank the whole TP family team mounting all this YouTube every week. You don't know the impact that you are doing to people like me. You guys are helping the whole community. So thank you very much. To all my fellow traders out there, if you're passing by, please do watch the other episode. It's really gonna help you. It's true what it says here. If you fix your mind, you will fix your trading. So again, this is Ronald Wacky Tupas. To see you guys soon. Rock and roll and peace out.
It's a mind game. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
Okay. First of all, I just want to say, when I was coming on the masterclass, I had something in my mind until I came across this testimony from Ronald. And I want to start by also saying thank you to the TP family. Thank you to my brother Kema. While he was teaching, and I'm sorry, Kema, I'm going to throw you under the bus, but he was not that strong today. but yet I'm just watching him teach with zeal. And I'm like, there is no way you will go unrewarded, bro. It's impossible for you to come onto this masterclass and still teach with that strength. Even though, today, if you would have told me, Cliff, I have to sit out because I'm not feeling well, I would have understood. I just want us to just drop some thank you in the comment section for Kema. And I want us to drop a thank you for the whole entire team. I want us to drop a thank you for Shells. And week in, week out, we are coming here for you guys. And it may have started like an episode, and 2 and 3 and 4 and 5. And today we're looking at 36 episodes. It's not something that just happened without the help of God. And I just want to say thank you to everyone that's tuning in today as well. I really appreciate it. You see, this masterclass, if this is your first time that you are coming to join, is going to look a little bit different from your usual trading calls or whatever that you join, and so on and so forth. And the reason being is because we try our best to make sure that we communicate the vision that has been given to us. You see, I always say this, and if this is your first time that you're hearing me speak, I understand very well. And at the end of the day, when I started trading, or when I started being curious about trading, when I say curious, you understand what I mean, because there's a difference between learning how to trade and being curious about trading. When I started being curious about trading in 2012, there wasn't enough retail trading mentors that I could connect to. It's either the knowledge is scattered, it's not structured, or the one that you are getting is not enough to make you profitable. And you may have heard me say this before, that no matter who you are, you may go through these 5 stages as an individual. I always tell people that the first stage is what we call the unconscious incompetence stage, the stage that you don't even know that you are not competent. And then you have the stage that you are now going to realize how incompetent you are, but you have no choice but to either quit or move forward. So the first stage, which is the unconscious incompetence, is the stage where you probably got started because a friend told you about trading, or you got started because an excited trader posted wins, and then you're like, wow, me too, I want to do trading. Anyways, and so when you started, you realized that, wow, I don't know what I am doing. And you moved on to the second stage, where you are now consciously aware that you are incompetent. As I said, you either quit or you go to the next stage. The next stage is what we call the aha moment. The aha moment is where things start to become clear for you. You now start to realize that there are many dimensions in learning how to trade. Then if God gives you the grace and you're able to, should I use the word travail? During the aha moment, you will now move on to the 4th stage called the conscious competence. You are now aware of how to navigate, but you have to do it consciously. And if God helps you and you are still able to survive during that stage, you will now go to the stage that we call the unconscious competence. That is how you drive a car. That is how you ride a bike. That is how you brush your teeth. That is how you do everything that you are able to do right now well during the unconscious competence stage. Somebody asked me a question and said, Cliff, I know that you say that it takes time for you to become a trader. I said, correct. He said, if it takes time, what then do I need to study and what do I need to learn to become? And so before I came on this masterclass, I'm ready to answer the individual or any other person who is having the same question in their mind. I structured, before I introduce my topic for today, today's not a topic, I'm just building the foundation for that individual. I structured like a school. I wrote down here level 100 to level 500. And I want to use you to give you a mental clear picture of how you should study and you could study, this is not the only way, but I am borrowing the school system for you to understand how to navigate. This is only to help you for navigation. You don't have to take my word only for it. You can also do a research and so on and so forth, okay? So, but before that, if you have not liked this masterclass yet, please like the video. And also everyone listening to me from Instagram or Facebook or wherever, or if you are listening to this as a replay on Spotify, hello to you all. I hope you guys are doing well. Today, I'm going to teach something very powerful. So I want to start building the foundation for you guys to understand. Today, we're going to talk about something. I'll not introduce it now. Just wait for it. I'm coming. So this individual said, Cliff, how long will it take me for me to become a trader? What do I need to study? So I'm going to break it down into 500 levels. So level, when you go to the university, we have a level 100, level 200. So I did it that way. You can write something down. The level 100, the goal for me. So some of you are asking, Cliff, is it going to only be psychology? No. As I told you guys, we have our first official boot camp coming up. That boot camp is going to be very powerful. It's a boot camp that is, let this be like the idea of the boot camp that you're going to have. Okay, so stay with me. So the first level 100 is what I call the basics. The basics. Why am I breaking it down this way? Because guys, listen, if somebody wakes up and go to the university and say they want to become a doctor, as beautiful as that sounds, if they don't give you the structure of what you need to learn to become an actual doctor to save life, if you don't learn it the right way, you will not save life. You will kill one. Are you with me? You will destroy one. So there is a way that you need to understand that when you move from the unconscious incompetence to the conscious incompetence, then you get to the aha moment. During the aha moment, the knowledge must be structured. You see, a lot of people need to understand that trading is not complex in learning. The knowledge is just scattered. And so people are either learning time frame today and they will learn about economy probably 2 weeks later. When do you learn what? Other people too are using every means to understand the financial market, yet they end up still losing money. So it's like everybody is trying to juggle around to see what they can do to survive. But I'm trying to give you, in the next couple of few minutes, a way to navigate your way before we will talk about today's masterclass. Are you with me? Because sometimes I feel like a lot of people are going to either keep on wasting money and keep on getting confused, and they don't know what to do, but they also want to learn trading, but they are confused that am I even going to make it? And so I'm giving you a blueprint here before we go on. So let's say, for example, somebody wants to become a doctor. They will study the human anatomy. They will study pathology, but not all in the same grade, not in the same level. There are going to be levels that are going to be introduced to you and so on and so forth. There are going to be times that you will study pharmacology. So as a human being, if you want to become a doctor, they need to teach you about the body. That is where we study the human anatomy. Then after you go to another level and you are going through your levels, after foundations or intermediate, you will start learning different things, different pathologies that affect the human body, the diseases. That's what I mean. Then you will now start to on the medication that can help. And all of that, even when you are done studying all these things, you still need to practice. You still need to learn in reality. So it takes a while. So let's say you have entered university called the Trading University and you are in level 100. The first thing they need to teach you is the basics. I wrote down here that the goal of the basics level is to build awareness and identity shift. You need to know that you are about to learn. That is not where you are even learning. You need to know what you are about to learn. So when they are teaching you the human anatomy, the level foundation of it, they are teaching you what you are about to learn about the human body and how to save it. What you study in the level 100 is not enough to make you equipped to become a doctor. So you need to understand that during the level 100, it is about what you are about to even learn. That is foundation, but it's quite a lot. So whether it being lots, leverages, spread, margin, the market, forex, indices, whatever, it doesn't matter. The goal of that part, you're going to still study psychology also there, but it's a basic psychology segment that you're going to have during that stages, during the basics level 100. That is the place where you need to know that trading is 90% your mindset as well. but it's not all that there is in psychology, but you need to learn the foundation. Are you with me? So level 100, you need to learn the basics. What is Forex? What is trading? Market environment, margin, spread. You are learning the basics. So level 100, follow me now. You are in the trading university. Then you go to level 200. I was trying to answer the person that in level 200, you are understanding context. The goal of level 200 is to be able to help you to connect trading knowledge to your real world. So if you are here and you're listening to me, and whether you live in Nigeria, you live in Ghana, you live in Dubai, you live in anywhere in Europe or anywhere in America, if you cannot connect what you are learning to your environment, chances are excellent it will be difficult for you to understand. For example, right now, no matter how you think you know, if I ask you questions about the financial market and you cannot be able to translate it into your country, something is wrong somewhere. So let's say, for example, I ask you, let's say you are from Nigeria, and I ask you, what is the GDP currently right now in Nigeria? You don't know. What is the employment rate in Nigeria? You don't know. Hopefully Nigerians have updated it and you don't know. But if your country does not even update it, that's a problem in the first place. But anyways, you don't know. Why is the country's economy bad? You don't know. You don't care. And you say you want to learn trading. If you cannot be able to answer your own country answers regarding financial markets, then you are not learning how to become a financial analyst. It doesn't make sense. Because it is your environment that you will use to be able to connect the dots to what you are learning. You see, in trading, when it comes to the retail trading space, majority of the things you are learning is concepts. We as retail traders, because we are at the bottom of the hierarchy, we don't know much. We are only borrowing concept and what has happened previously to keep on evolving. So when the market shifts, it takes time for us to understand what is happening. You cannot understand market shift right now as a retail trader. It takes time. So when it shifts now, it takes time for us to adjust. So you realize that as a retail trader, you are trading well. If the market shifts, something starts happening to your decision, and then you will not have to catch up. So there is more that we don't know, but we are always learning on the go. So you need to be able to find a way to connect the concept for it to make sense. So when we talk about economy, don't go far as a Nigerian, as a Ghanaian, to go and understand American economy without understanding yours first. It wouldn't make sense. Are you with me? So now if they ask you what is an economy, I remember back then when I used to talk to some new people, they'd be like, but Cliff, how would this help me to make money? That is where your issue is. Your issue is that you think that all you have to do is to learn some strategy and steal it. There are people back then when I get on a call with them, and when they look at what is on my screen, they will quickly take pictures and think they will go and duplicate it on their own trading view and make money with it. You are joking. That is not how trading works. Even if I can give you my strat, those people that came onto the masterclass, the TP family rep with me, I gave them one of my tools. I gave it to them. Whether they can use it or not, it's up to their knowledge they have and their mindset. I'm not hiding anything. Does that make sense? And so you cannot just steal a strategy, borrow a strategy, and quickly go use it in your life and make money and become free and say, wow, trading changed my life. It doesn't work like that. There is no shortcut to this business. No, don't let anybody lie to you. Somebody asked me, how would I know I'm learning the right thing? I said, if what you are learning is making you know it will take a while before you make it, you are learning the right thing. If whatever you are learning now is making you believe in 2 months you will make it in this industry, run. I'm telling you the truth. Unapologetically. If whatever you are learning in this industry is making you believe in 2 months you will become profitable, run. Run. You don't even want to become that profitable in 2 months because you don't know what is at stake in the future. Believe me, it takes time. So during that stage is where when somebody asks you, what do? You said, oh, I'm a financial market student. Oh, so that means explain to me why your country's economy is bad. Then you need to be able to explain. So you sit the person down and you say, listen, when it comes to an economy, there are a few things you need to understand. The person is, okay, I'm listening. What is it? And so number one, when you enter into any country, there are a few things you can use to see why the country's economy the currency is either depreciating or appreciating. Oh, what do you mean? There is a website called Forex Factory. Oh, yes, I've seen it. Yes, we use Forex Factory to look at the indicators of an economy. Oh, so what is an economy? Economy is anything. Economy is a system in a country, pillars of institutions or individuals that need to spend, earn, and then spend, earn, spend, and earn. So there's the government, there is the individuals, and then there is companies. If the government is not earning and spending, and the individuals is not earning and spending, and the companies is not earning and spending, then the economy can be performing well. Oh, wow. So that means that is why if there is no jobs in the country's economy suffer? Yes. Why? Because the people cannot earn and not spend. Why are you learning this? So next time when you now go on to Forex Factory, you are no more going to assume what is these numbers for and how do I connect it to dollar. You now know it by understanding. You will not ask people that, how do I connect Forex Factory to trading? Because you have not studied the basics. You can't borrow a strategy and make it in trading. So during level 200, you are understanding the context. Now, students, let's go to level 300. What do you study there? Level 300 is application season time. It's now for you to start applying. That is where you need to practice money management, strategy testing, order flow, and price action. You are understanding that, this is why the market moves the way it moves. You are understanding the lifestyle connection between trading and everything. You are applying things. You are now practicing. They are now teaching you how to be able to use platforms and things. You are understanding many things. So the platform that you understood from the context of, okay, so if I want to analyze this market, I will use TradingView, MT4 during the understanding the context in level 200. Now I'm coming to now use it to understand how to analyze order flow. You are learning all of that, level 300 now. Then when you go to level 400, it's about sustainability. You see, level 300 is a practical stage. Anything practical, it can take a while. You're going to backtest using demo accounts, winning, losing. You are practicing everything you have been learning from the level 200 coming all the way down to the level 300. You are now learning and applying and analyzing things. Order flow and price action is now making sense to you. You are now understanding how the market moves. Time frame is now making sense because you can now connect the higher to the middle and then to the lower. You are now getting the whole context in level 300 very well. But now your mindset is not just too vague. It's not shallow. You understand different kind of context. Are you with me? The one way you now get to level 300 is all about practical structures. You are applying the things you are studying. I wrote down here that during that time is when it comes to psychology, you are going to be able to learn how to handle emotions like fear, greed, FOMO. Because it is the application time that these psychological things will worry you. Fear, greed, and FOMO will happen to you over there. Then during the level 400 is what I call the business stage or the sustainability stage. During the business stage, we now need to let you understand that trading is a business. Meaning that it's not just about clicking buy and sell. There is a whole nature of business to it. Whatever you choose or whatever career you choose to follow is up to you. You can become a risk analyst in a firm. You can become an execution analyst in a firm. You can become a psychologist in a firm. Clicking buy and sell alone is not the only path to choose as a trader. There is more to the business. You can decide to work in a brokerage that has good values and still make money in trading. It doesn't necessarily, you can be a tech guy and develop proper platforms better even than many platforms out there because you were a trader. You understand trading. So during that time is where you are understanding that there is more to trading than just clicking buy and sell. There is a whole business structure to it. So during the level 400, your cash flow system, you are understanding it. Networking, that is when your mentor or whoever is teaching you is telling you, listen, there is an expo here, go to the expo and network. Because you cannot say you want to become a trader. Have you realized when you are in an institution, sometimes they will basically tell you we are going for an excursion to go and check the museum to study what happened in 300 years. Networking. They want you to get your brain expanded. So level 400, you are going to different seminars. You are going to different expos. You are listening to the business. It's all part of the learning. It's all part of, you can't just lock yourself in your room and don't let those testimonies you see and people will sometimes say, I locked myself for 24. Some of you guys, if you try it, you will go mad. I locked myself for 1 year and made $1 million. If you are mad, what would you use the $1 million to do? Go out, network. You are a trader. Do more than just sitting down doing one side of the business. There is more to this business. Are you with me? So level 400, that is where you are learning. Then level 500, I call it the last stage, is transformation. Now you are in the mastery stage. You are no more crying over losses. You understand trading is a business. You will lose some, you will win some. Negative 50,000, you come back again. Negative 20,000, you don't care. You are making 50,000, you don't smile. You know this is a business. You are doing nothing. Mastery. So it takes a while. All these things I just gave you in a vague way is a lot and broad. That's why I'm giving you an idea of how it's going to be. So wherever you are right now, maybe you know the basics, good for you. Maybe you understand the context of the platforms and everything, good for you. It's possible you are around the application stage, which is the level 300. You need to learn well. Don't just assume you understand. Learn. Trading is a business and it's a serious one. The big boys are not joking, only you are. So learn. Are you with me? It is very important that you understand this, because when you don't understand it from this context, it makes you look like, oh my God, I make money, like a Candy Crush. It's not a game. When you lose, that is my problem. You see, I always tell people this. I don't care the days that you are winning. The day that you don't win is the issue. The day that it doesn't go well is the issue, and it will not go well all the time. So what do you do? So many people ask me, Cliff, so I said, and another question that came was, which one of them is important, psychology or edge? I said, neither. Both of them are all important. Everything is important. You need to understand the technical side of trading. Psychology, I've said this before, does not help you to make money. It helps you to survive, whether you are making money or losing it. Psychology is a survival system so that you can live to trade another day. What makes you money is risk management. What makes you lose money is risk management. Psychology is a survival system. If you don't have it, you will break down, you will cry, you will blame, you will complain, you will be sad, you will not be happy. That is psychology. But if you want to make money, it's a risk management conversation. So during your level 300, you learn money management, capital and risk to reward ratio. You learn it in level 300. But psychology is a foundational system you need in your mind to survive. It's very important that you get this concept. So a lot of people are thinking that I'm saying, and people ask sometimes, Cliff, then why do you teach only psychology? Because that is a dimension in trading now that most people are ignoring. That is the truth. Are you with me? So I am not saying trading psychology is the only important thing. No. They are all important in different dimensions that has to come together as one structured uniform to help you to survive. Technical analysis, risk management, psychology, business development, scaling up your business, everything is important. Are you with me? So wherever that you are right now, whether you are in the aha moment or the conscious incumbent, whatever stage that you are in, you understand you cannot skip the knowledge part. You can't. Okay? All right. Today I'm going to teach something very powerful. Stay with me. If what little thing that I just told you here makes sense to you a little bit, don't worry. Some people will be asking me, Cliff, the bootcamp is coming. The bootcamp is coming. Don't worry about it. It's structured in a way that it will give you knowledge. Don't worry about it. But we need to take our time, because you are going to be learning more than trading. You will learn economy. You will learn economics, you will learn accounting, you will learn many things. You will learn even about brokerages. But we need to put system in place. So please be patient about those. Also, that is emailing. I see all the emails. Just be patient. One more announcement before I introduce my topic for today is that if you want to consult with me, currently right now, the website is probably down because, again, courtesy of some of the TP family members, an individual I have so much respect for, I will introduce him to you guys very soon. We had back and forth conversation, and he was very brutally honest with me. He Cliff, I want us to basically make the website easy, streamlined for you, and so on and so forth. So we had a conversation, and then so we are sort of adjusting a few things on the website right now. So it's going to be updated very soon for you guys, so that you guys will know how to use it. But for the meantime, if you want to consult me, whatever one, or you just send an email. I think the media will keep on bringing it up on the screen so that you guys can see, consult@cliffcheqona.com. The team will schedule a meeting with you and I will just listen to whatever issues you have. Whatever issue it is, just let me know. However, also, if you schedule a meeting, please do check your email that you use to schedule the meeting. Because, if you schedule the meeting and you don't make it, it's very difficult for me to rebook you again for another meeting if you didn't make the first one. I want to help you as much as I can, but unfortunately, sometimes I don't have the time all the time to just meet only in your convenience. It doesn't help me as well, because there is a lot that I do. Does that make sense? Okay, then. That announcement being away now, let us talk about today's. I'm ready to teach, as you already know, and you are ready to learn. I'm ready to teach. Last week, The declaration of my heart was, I made the eyes of your understanding being enlightened. And I believe many people, your eyes are being enlightened. And I'm praying today as well that by the grace of God, knowledge would descend upon you beyond just knowledge, understanding, and the wisdom to apply the things you'll be learning. Okay? And I pray that in Jesus' name, everybody will understand this context very well. All right then. Today I'm talking about something very important. I'm going to go straight ahead and introduce my topic, so please write it down. My topic for today is why traders never withdraw. Why traders never withdraw. Why traders never withdraw. Please write the topic down. I'm going to repeat it one more time. Why traders never withdraw. Not all traders, but I'm making it general in this context. Many traders. If I add why many traders never withdraw, it's too much long of a context. So bear with me. Why traders never withdraw. That is today's topic. I want you to declare to yourself wherever you are right now that I will not leave this call or this live stream the same way again. Facebook, Instagram, YouTube. Declare. I will not leave this live stream the same way again. Tell yourself that. Tell yourself that you will not leave this live stream the same way again. That I will not leave this live stream the same way again. That it is either the knowledge is coming to you or you are coming to the knowledge. One way or the other, you are not leaving this live stream the same way again. I want you to declare to yourself, I am not leaving this live stream the same way again. That I'm going to receive, I'm going to be receptive to the information that is coming. I'm going to give you some couple of few definitions first. Write this down for me, please. First of all, before you write the psychological definition I have, we all understand that when it comes to withdrawal, it's an act of moving money from your broker to something else, right? You see, I've said this and I'll say it again. The financial market is not a place where we go to make money. It's a place where we go to multiply money. So you cannot multiply what you don't have. I'm going to repeat it again. The financial market is not a place where we go to make money. It's a place where we go to multiply money. So you cannot multiply what you don't have. It doesn't even make sense logically. And so many traders, they have found themselves seeing blues, adding profit to their account, but they never make money. You see, the percentage of your account increasing is not money. No, it's not money. Profit is not money. Profit is an increment number on an account. It only becomes money when you do what? If you're listening to me right now, put it in the comment. It only becomes money when what happens to the profit. Engage with me. Instagram, Facebook, YouTube, it doesn't matter. You need to do something to the profit in order for it to be converted into money. Until you withdraw, it is not money yet. So there is something that I told somebody. I said that a demo account is not an account that is written at the top, demo only. That you can have a live account and still be a demo in your trading life. No matter how much you have in your account, even if it says live, if it's not out of the brokerage, it is still not your money. No, it's not, Chief. It is not. It is not. The money, the profit needs to come out in order for it to be called money. If it's still in the brokerage, it's nothing but numbers. So this live masterclass is going to make some other people very happy. Some other people to make them, okay, so I have to change my plans. No, I'm not saying that, but stay with me. Are you with me? So that is the reality in terms of the context of withdrawal. When you move money from your brokerage into your bank account, into your wallet, into any form of a place where you save money, That is what we call withdrawal. But I want to give you the psychological definition. Of course, it's Trading Psychology Masterclass. Let me give you the psychological definition that I wrote here for myself for withdrawal. I wrote down here that withdrawal is the conversion of belief into reality. Withdrawal is the conversion of belief into reality. Withdrawal is the conversion of belief into reality. I'm going to repeat it one more time again. Withdrawal is the conversion of belief into reality. It is the moment your trading stops being just numbers and becomes proof that your work is enhancing your life. You need to write it all. It's all. Please, it's long, so let's write it. I'm going to repeat it again. Psychological definition I'm giving you is that withdrawal is the conversion of belief into reality. Remember, what are we talking about here? Why traders never withdraw. So withdrawal is the conversion of belief into reality. That is the first line I want you to write. Second line, it is the moment trading stops being just numbers. It is the moment trading stops being just numbers and becomes proof that your work is enhancing your life. And it becomes proof that your work is enhancing your life. I want you to underline the word enhancing your life. I'm going to just go through one more time again, and then I will go on to the next structure. Withdrawal is the conversion of belief into reality. The psychological definition here. Withdrawal is the conversion of belief into reality. It is the moment trading stops being just numbers and becomes proof that your work is enhancing your life. Now, I want you to open brackets and I want you to put this in there. Without withdrawal, your mind never fully accepts trading as real, and that's why most traders stay trapped. Without withdrawal, your mind never fully accepts trading as real, and that's why most traders stay trapped. That is why when you meet an investor, sometimes they can tell you, oh, you know what, if trading is real, let's make a withdrawal, let me see. They are not trying to see if you can trade. They just want to know if truly this is a business or not. So without withdrawal, your mind never fully accepts trading as real. And that's why most traders stay trapped. Are you guys with me? Good. Let's go. Let's go. We have a lot to learn today. A lot. Why traders never withdraw. Powerful topic today. You're going to learn a lot. May the eyes of your understanding be enlightened. Okay. Now, while I was preparing this masterclass, I was thinking about, I'm like, Cliff, you know, the truth of the matter is traders never withdraw because there are reasons, and it is true. And so I started to structure the reasons in my head, and some from personal experiences. I told you guys that when I started trading in the beginning, the first brokerage I opened, I woke up one day and the broker has collapsed. There is nothing I can do about it. I never got my money back. The broker just went. So there are reality reasons, like what I'm saying now. A broker can collapse. So I'm going to give you guys several reasons, and I want you to categorize it into 3 structures. 1, I'm going to give you reality reasons. Number 2, technical reasons. And number 3, psychological reasons. Why traders never withdraw. When we finish discussing why traders never withdraw, my goal is to give you the strategy to be able to get yourself into a position where withdrawal becomes your lifestyle. Did you get what I just said? That after I have given you the reasons why traders never withdraw, I will now show you the blueprint of how to connect trading to your lifestyle to make withdrawal understandable to your subconscious mind. If you are ready to learn, drop some number ones in the chat. I'm ready to teach now. So you are ready to learn. Okay, please don't forget to like this stream so that this masterclass can reach other people like yourself. Okay, thank you. And don't forget to invite somebody and share it as well. Let them join, because we're about to teach something very powerful. For me, when I started trading, I didn't have the privilege for somebody to tell me about withdrawal. Withdrawal is also a practice. So psychologically, if I want to help my client to be able to understand that trading is a business, I don't have to motivate them that, hey, trading is a business. It can change. No, chief, let them withdraw. It will take care of it. It's like fire. If fire burns you, I don't need to do a masterclass over that. Common sense will teach you about how dangerous fire is if you're not careful. Is that true? The same way, if right now I am talking about withdrawal and you don't actually withdraw if the chance is there, then there is a problem. So let's talk about the reality reasons. The first one, which I told you, the reality reasons, I wrote down here, number one, some brokers have minimum withdrawal amounts. So some people cannot withdraw because some brokers, they have a minimum. So if, let's say, your money is small and you have not reached even a minimum yet, how do you withdraw? There is nothing you can do about it. There is no magic around that. Your money is not enough to withdraw. It's not enough to withdraw. So I'm not talking to that category of people today. Cliff, I want to withdraw, but my money is not enough. I'm sorry, chief. It's just a reality reason. It's not enough. You can't do anything else than to respect the fact that it won't happen. Does that make sense? So if the broker you are using has a minimum withdrawal that is above your strength, unfortunately, you can't withdraw. So that's why I'm naming the first reasons as reality reasons. You can't withdraw. Then the second reason is that there are several reasons where some people have come to me, or when you Google some brokers, some people will tell you that this broker is a scam. They don't want to give me my money. It's not true. You see, a lot of people don't know that when it comes to brokerages, the way you deposit is the way you need to withdraw. You cannot be able to deposit with crypto and want to remove it or withdraw with your bank account. It doesn't work like that. The brokers now will not allow it. They won't. So if you deposit with the actual wallet, maybe USDT Tron, you need to withdraw with the same wallet address. So a lot of people, because nobody taught them about brokerages and how they work, they deposited maybe with a wallet in USDT and they want to withdraw with bank account. The broker will not allow you. You will do everything, they will not allow it. So I've had situations whereby people will now go back and be angry and blow the money. They couldn't withdraw. Why? Reality reasons. They deposited maybe with the wallet and they forgot the wallet. Now they want to remove it with their bank account, but the broker said no. So they get angry and they go on internet. So and so broker is a scam. I'm sorry, chief, no matter what you say, some people also got their money out. So this alone is a light bulb moment for somebody. Always deposit with the amount, always deposit. The way you deposit into your broker is the way you must withdraw out of it. If not, your money will get stuck in there. Reality reason number two. Third reality reason, prop firms. If you are using the prop firm right now, the reality is that it is either, you will get a payout or you won't. Secondly, you have to wait for the payout time, even when you make profit. So you can't withdraw anytime, any day you want. You have to follow the prop structure. Are you with me? That is also another reality. So Cliff, I want to withdraw now, but it's not time yet. It is true. You have to wait for the prop firm. Reality number three. Then I wrote down here that especially my people in the United States, right now I heard that some other prop firms, I'm not going to mention them, is back again in the United States. But even so, right now it is very difficult for the average somebody who is an American resident to trade on some certain brokers. It's a reality that they have. And sometimes it's even expensive for them to even withdraw some more money. So all these things are realities. They are going to obstruct your withdrawal process. And when this happens, unfortunately, it makes other retail traders, they become discouraged and they will rather just say, you know what, I'm just going to wait until it builds up. So while they come on this course, I tell them, name some of your account groceries, name some of them bills. They get the concept, they get the abstract concept. But to really go beyond the abstract concept, there are real reasons they are struggling. These are reality reasons. Couple of few examples I want to give you. Are you with me? So I'm trying to let you understand that the common reasons why traders never withdraw is not only just psychological. There are reality reasons as well why traders can actually not withdraw. Then when you come to the second dimension of the reasons, I call that technical reasons. So the first one that I gave you is reality reasons. The second one is technical reasons. Let me list some of them for you. There are many people here who are trading very small accounts, very. So if you are trading $20 account right now, because there are some brokers that will allow you to deposit as little as $10. So if you deposit as little as $10, it's great that you have $10 in your account that you are trading. But the truth of the matter is, which one would you withdraw? Because if you make $1, that $1 is good in terms of percentage, but it will not be able to withdraw. So how then do they withdraw? The truth of the matter is, for you that you are trading a very small account, the reality is it is small. So that is why they always want to flip it to 100 so that they can get something to withdraw. And when they try to flip it to 100, something may happen, or maybe they may be able to do it. So when that individual now comes across a video that says, I turned $10 into 500, they are happy. They want to watch that video because it gives them the hope of their small account. But unfortunately, if your money is $20, chances are excellent it may either take you time to withdraw, or possibly you may never withdraw. Are you with me? These are elephants in the room we need to discuss. There is an elephant in the room. Your money is small. That is the reality. So Cliff, what do we do? I don't know, Chief. It's just unfortunate that your money is small. It's a business. And if I don't tell you the truth, somebody else will give you false hope. Are there people who have been able to flip small money into big money? Yes. But how many times did they do it? Go and ask the Wonder Boy. They are the Wonder Men. Ask them. But for me, I will tell you the truth. There is a possibility, but will it happen for you? And even if it happens for you, how many times? You have to be ready to be blowing the account then. If you want to flip $20 into 500 in the same day, you have to be ready to be losing it. It's gambling. It's no more trading, because trading is a business. So in reality, the technical reason here is that if your account is very small, you don't create profit big enough to withdraw consistently. That is the issue. That is the issue. So technical reason number 2, fees or charges make tiny withdrawal not worth it. Is that true? That there are some of you here right now, you want to withdraw, but when you withdraw, if they add fees to it, if it's not USDT or whatever, if you add fees to it, it's small. If it's small, you'll be like, let me just grow it to some point before you realize you are now losing the profit. But meanwhile, technically speaking, percentage-wise, the money was good. But then monetary-wise, if you are withdrawing, it's small. So you're like, you know what, let me keep on making it numbers. And then before you can realize, you blow the money. Technical reason number 2, fees or charges make tiny withdrawals not worth it. Then also poor money management is technical reason. Traders keep blowing account before they ever even reach withdrawal side. Why? Because they want to make money fast and withdraw. They don't treat it like a business. And traders don't set any rule or system for when and how much to withdraw. We will come to that one again. So technical reasons is what I've given you now. I started from a reality reason that some people cannot even withdraw in the first place because of some few technical mistakes that they made, or reality reasons that hit them because of technical mistakes. Like what? You deposited with one way and you want to withdraw the other way. The broker will not allow you. So they end up not withdrawing. Or you are trading a prop. You gotta wait for either bi-weekly or monthly. Or, the broker does not allow you to withdraw that small amount of money. Those are reality reasons. Technical reasons, probably your money is small, poor money management, and so on and so forth. Now let's go to the main part of this conversation. Psychological reasons. Psychological reasons. Here, I will dwell here a little bit, so stay with me. Psychological reasons. I will dwell here a little bit, okay? I hope you guys are learning. All right? On these masterclasses and in this community, truth will always prevail. You need to know the truth. I'm not going to be one of those mentors that will tell you, oh, don't worry, just use, small amount of money. Even if it happens to person A, what are the chances it will happen to you and another person? I don't know. And for that, I can't teach that. It's like when you are teaching as a coach. Me as a coach, there are several things that has made me money in this industry. I can't teach it. Why? Because it is not, let me borrow this term, it's not doctrine, meaning it is not a structured knowledge that can happen to almost everybody. So if I teach that, I'm confusing the majority. It's called personalized dealings for my life. So if somebody turns, or if I turn $5 into 1,000, I can't teach that as a strategy. Why? Because it cannot happen for everybody. But there are several things that are objective. It can happen to anyone who applies that theory. That is what I'm teaching now. So don't get me wrong. I'm not saying nobody has not turned small money into big money before. I'm just saying I can't teach that as a concept because it's only perceived and experienced reality. It can't be objective. Are you with me? Psychological reasons why traders never withdraw. Number one, numbers illusion. Numbers illusion. Anytime you hear illusion, it's connected to your mind. Numbers illusion. It means you seeing something for the way you are, not for the way it is. So numbers illusion. Once the money enters a broker, traders stop seeing it as money. You see, the moment that it passes through the portal of the person and it enters your brokerage, boom, that's it. It's no more money. Your mind will not perceive that as money anymore. It will perceive that as numbers. So it becomes just equity, lot size, points, TP hit, stop loss hit, TP hit, stop loss hit. But you are not realizing that TP hit, stop loss hit that you are saying is money that you are talking about like that. Money hit, money gain, money hit, money gain. You don't speak like that. TP hit, TP loss, TP hit, TP loss. Right? That is how your mind starts to project it. So now numbers now becomes illusion. You now forget that it can only be withdrawn before it becomes money. So numbers now becomes illusion. Psychologically, your brain doesn't perceive the numbers anymore as money. It only sees it as numbers. So when you hit TP and it's blues, you get the gratification. Oh my God, I am being profitable. No, chief, not yet. Not yet. Not yet. It's just numbers still. Because that same numbers you saw yesterday can become nothing. So if it's still in your broker account, it is not money yet. So numbers illusion. Psychological reason number one. Number two, dream obsession. Traders connect trading to escape fantasies. You see, one of the things that I always tell people that is this, and we're going to do that. I'm going to teach you how you can connect withdrawal to your lifestyle, but I need to hammer on this first. Dream obsession. You see, you will find one trader who cannot eat, let me not even call him a trader yet, one civilian who wants to be a trader who cannot even enjoy a 3-square meal yet. They can't. Their whole life, they eat once a day. There is no shame about it. It is there. I've been there before. Eating once a meal. Sometimes those days when I was there, it was not by choice. It was because it was a strategy. Now, if I don't eat by the grace of God 3-square meal, it is because maybe I don't have time and I'm busy. We thank God for that. But you need to be able to understand this, that at the end of the day, if you cannot be able to eat 3-square meal yet, why don't you solve that first? Why do you want to buy a Lamborghini first? You don't even know if trading can help you to eat 3 times a day first. If you're eating rice and it's just only rice and stew and no meat, why don't we solve the meat problem first? Why do you want to buy a Lamborghini first? Why do you want to buy a mansion first? Why do you want to solve the girlfriend problem first? Let's solve the 3-square meal first. Let's solve the meat problem first. Are you with me? It's very important that you understand this. If you are here, you are taking taxi, no problem. There is no issue with that. Why don't you enhance the taxi though? Why don't you enhance the Uber? Once in a month, why don't you just experience a lifestyle that enhances your life? But you see, dream obsession. I saw the person who withdrew $100,000 and I want to do the same. And they forget that trading success is a relative business. Dream obsession. Traders connect trading to escape fantasies. And I will say this and I will say it again, but watch this. Trading is not meant to change your life. It's meant to enhance your life. Let me say it again. Trading is not going to change your life. Trading is going to enhance your life. Enhancement is when you do something that already exists, but you upgrade it to a better version. Okay? You enhance it to a better version. So it's like, for example, we are using a platform right now called StreamYard for this stream across all platforms. If we don't pay for the upgrade version of StreamYard, there are several things we can do. However, if we pay for the StreamYard upgrade and we are able to do certain things, we have not changed the platform. We have only enhanced the package. But you can still tell the difference between the previous one and the current one. Are you with me? So if you are taking, let's say, Metro, let's say you are in Dubai and you're taking Metro, you don't need to say, oh, I want to just make money so that I will not take Metro again. No, chief, even in the Metro, there are levels. Upgrade yourself in the Metro first before you even think about it. You need to respect process. At least move from the average to the gold one first. And know that, man, right now trading can allow me to take gold Metro. Okay? So traders don't understand that trading is meant to help you enhance your life. And while you are enhancing your life, you don't need to tell people that your life is changing. They will see it. They will see it themselves. So the second psychological reason is called dream obsession. Why? Because they don't understand that withdrawal is never part of their subconscious plan first. Because subconsciously speaking now, you have not reached a certain level yet, but you are trying to fulfill a dream that is above your current state of mind. So dream obsession. Third reason I wrote down here, compounding myth. I wrote down here that traders think that withdrawing slows growth, so they keep chasing the big future withdrawal that never comes. I'm going to repeat it again. Traders think that withdrawing slows the growth. It slows the growth, so they keep chasing the big future withdrawal that never comes. So it's like, if I withdraw now, it will reduce my account. But remember, the withdrawal you are doing now is not to make your life look like a luxury person. No. For example, it's supposed to help you psychologically to know that if I don't withdraw, my subconscious mind does not believe me. My subconscious mind does not believe me. So I need to make my subconscious mind believe me. Are you with me? You need to make your subconscious mind believe you, and it can only believe you by when you use trading money. Even if as little as you bought an ice cream, it will start to believe you that, wow, I saw with my eyes that this person is withdrawing this. By you, I'm talking about your subconscious mind. It will now believe you in that order. So the third reason is the compounding myth. We need to kill it. Withdrawal does not slow your growth. Withdrawal actually enhances your growth more and more as time goes on. Fourth reason, fear of smallness. Traders think that $10 or $20 is too small to withdraw, and I don't blame them. It's also again connected to the dream obsession. They have seen somebody withdrawing $1,000, so their $10 is very difficult to withdraw. Why? Because it will not do anything, and it is possible, but I will teach you why it's like that. Fear of smallness. You thinking that $10 or $20 is too small to withdraw, it won't change anything. So what do? They don't realize that if they ignore small withdrawals, it will also give them the ignorance of the big ones as well. Traders don't understand that. You ignore the small ones, you are automatically ignoring the big ones. It will never come. Because in life, everything must start from a dimension of where you can control before it becomes bigger. I was talking to two people today from the TP family, and I told them something, and I said, I understand when we say, I was like, let's discuss the elephant in the room. I want to borrow from the concept we started, and I said, if you don't have money and you are trading, it's going to be very difficult for you to make money as a trader. It's true. You can't do anything about that. You see, a lot of people are struggling to accept losses as lessons. You know why? Because anytime that you say something is a lesson, it means you were able to afford the tuition. Some of you didn't catch that. Don't worry, I'll repeat it. Every time that you call something a lesson, it means you were able to afford the tuition. I'm trying to borrow this concept to explain fear of smallness. If you can be able to afford anything that we call lessons, it means you can afford the tuition. I will explain. Watch this. If you cannot pay for a tuition, you can't get lessons. That's not how it works. So if you deposit $50 in your broker account, and the $50 is all that you have your whole life, it can never be a tuition fee. Impossible. That means if you lose that $50, if you come onto this masterclass and I tell you lessons is part of the game and you need to be able to accept it and learn, you'll be like, Chief, Cliff, take your nonsense away. Why? Because that is not a lesson fee. For you, it's the whole entire beginning seed of a generational wealth. So to you, you are like, man, this is I can't take this as a lesson, Cliff. So while I'm saying declare that I am learning, you're like, I'm not learning, Chief. I'm not learning. I have lost and I'm in pain. Yes, you are. Because a lesson can only happen when you can afford the tuition. So if you have $1,000 and you lose $50, you can reflect and journal and sit down. Okay, I lost $50 because I didn't wait for the patience. But now imagine if all you have is $50 and you have come onto this masterclass and I'm telling you the $50 you lost, which is all your money, is a lesson. You will not like this masterclass. You will not like it. And it's not your fault. Psychologically, it will fight me because it was like, Cliff, what do you mean I should take? This is all that I have. How is this a lesson? You are in pain. It is true. So if you cannot afford the tuition fee, the experience in trading does not become a lesson. It becomes pain. And that pain will sometimes destroy your confidence. It will destroy your belief system. And there is nothing you can do about it. That is why it's important you understand these truths. So if you have $1,000, that is good. You can risk 50 and call it a lesson. But if all you have is $50, you can't call that a lesson. Even if you do it, your subconscious mind will tell you are lying. So there are many people, when they come across my channel, quickly they will click not interested, not because I will tell you the truth. So they will click not interested because this guy is about to tell something right now that will not let me believe that I can make it. You will make it, chief, but you need to accept the truth too. So if you know a friend who will sometimes tell you, bro, if you listen to this guy, he's running away because he knows he's hearing the truth. There is something that truth will do to your heart. But when you accept the conviction, it changes your motion. You are with me? So if you don't have money, you will have the fear of smallness. There is not, but Cliff, what do I do? Chief, for now, it's a reality reason. You can't do anything other than just being patient, and hopefully one day you come across money that can help you grow it well. But if your money is small, it won't work. It won't work. Even if it works today, what about next week? So what do? While you are learning, you are patient. Being grateful. Okay, I have only just $50. I'm able to make $5. Be grateful. Even if you can't withdraw physically, withdraw mentally. Connect that one. I will come there. I will teach you. Connect the $5 to something you could have bought with that money and be grateful. Celebrate it. Be simultaneously creating this mindset for you. So elephants in the room. I said today we are going to be addressing some elephants in the room. If your money is small, it will affect you emotionally. So some people cannot cut their wins, their losses, and say it's a lesson. If they call it that, their brain will not allow them. So fear of smallness is a psychological reason. Number 4, fear of smallness. Number 5, eternal trading cycle. Without withdrawals, trading becomes like a video game. And some people are actually addicted to this video game. You remember, I've told you guys this story before. I said that the child that sits down and play with a toy and saying, boom, boom, mommy, I'm going to the shop. That kid does not know the difference between what they are doing and the real life of a car. They actually believe they are doing the same thing their dad is doing as well. Now, that behavior may leave as playing with a toy car, but it never leaves in your life. You can still play a game in life, even if it's trading. So there are people right now that they don't know they are doing toy trading. So for them, why do I need to withdraw? Do I need to withdraw now? I want to compound. And I told somebody, why do you want to compound in a broker? Why? Tell me why. Just give me a real reason why you think compounding in your brokerage account is the solution. Just tell me. Why, chief? What is the difference between compounding in your bank account? By structuring a proper number game to understand when to withdraw and when to keep that money in your broker account. It's not yours. Anything can. What if the broker wakes up and they say that something has happened to it? What if one day there is a woman I know, a very interesting woman I know previously as a client. She was learning how to trade and it became so good for her that she made money. She woke up one day and her child took her phone and was playing with the MT4, and then the child entered lot sizes and blew the account. There was nothing the woman can do about it. So anything can happen to the broker account. So even if you are compounding, find a system that makes you keep some money in your account. If you have the money, keep some money in the account, withdraw some of them and compound it somewhere. It's wisdom. The Bible says, walk circumspectly as wise and not as a fool. It's wisdom. So, eternal trading cycle. Without withdrawals, trading becomes like a video game. Endless numbers, endless chasing, no real reward. Last reason, psychologically, I want to give to you. Lifestyle disconnection. I want you to put this one there and underline it. The last psychological reason. Lifestyle disconnection. You see, when you don't connect trading to your real life, trading just floats as a dream. I'm going to explain this. This is where we are now about to enter the actual masterclass. This one is, I'm just building foundation for you to understand that if you are not withdrawing, there is a real reason and it makes sense. Technical reasons, reality reasons, it makes sense. There is also a psychological reason. But all the psychological reasons are listed for you. The one that is important to me is the one that you're about to write right now. Lifestyle disconnection. Lifestyle disconnection. You see, a lot of people don't connect trading to their real life. They want to trade, so it's like they have a real life, but they want trading to fund their fantasy life. But then their real life is in one corner. They are forgetting that they can still buy milk. They are forgetting that they can still buy bread. But they're like, oh man, if this trading goes well for me this week, I won't really. No, that is a fantasy. Your real life is here. So lifestyle disconnection, it happens to you psychologically. So trading to traders like this just float as a dream instead of being rooted in daily living. I want to hammer this part in your mind very well. Lifestyle disconnection. You have separated your actual life from your trading life, but you are forgetting they mirror each other. So I want you to write this down. The lifestyle of a trader, the misconception versus reality. You see, when it comes to a lifestyle of a trader, you need to be able to understand this, that it is not you living like a millionaire instantly. Flashy cars, luxury houses, freedom, no stress. When people sometimes tell me, when I ask people, why do you want to be a trader? So that I can basically quit my job. Chief, why? Why do you want to learn how to trade to quit your job? Trading is a job on its own. There is, you see, sometimes here, because we don't, it is true that there is a level of some convenience when it comes to the way you operate with time in trading. But there is, it's not different in the area of being responsible. Yes, you are still going to work. You still have to take your business seriously. If not, it will be a success that is having potholes, not really a success that will give you confidence and say, I can live on trading as my business. You will see. So there is a misconception here that if I start to become a trader, I'll become a millionaire, I'll at least make some money. That will make me leave my job, quit my 9 to 5. Probably I don't even have to continue school. It's true. It can happen. But when that becomes the sponsorship to your trading learning, you will not get there because you don't understand the concept of this. That if you leave your 9 to 5, what money would you use to trade? It doesn't make sense. What is the reality? A trader's lifestyle is supposed to be a step-by-step enhancement. Please write it down. A trader's lifestyle is meant to be a step-by-step enhancement. You have heard me saying this, that trading is not going to change your life the way you want it. It's only here to enhance your life. And the many upgrades you do in enhancement is how your life eventually starts to change. So a trader's lifestyle is supposed to be a step-by-step enhancement. Trading is meant to upgrade what you already have, not magically replace everything at once. I wrote down some truth over here. I said, if your current lifestyle is that you can't even afford 3 meals a day, trading should first enhance that. If your current lifestyle is that you can't even afford 3 meals a day, trading should first enhance that. Let it pay for the 3rd meal. Let it pay for your internet bill. Let it cover transport. That is enhancement. I'm going to hammer it again. You need to enter your medulla oblongata. Listen to this. If your current lifestyle is that you can't even afford 3 meals a day, then trading should first enhance that. Let it pay for the 3rd meal. Let it pay for your internet bill, and let it cover your transport. That is enhancement. That is enhancement. That is enhancement. So some of you guys are already coming around a cliff. How are we then going to withdraw? How do we get to a point where withdrawal becomes part of our lifestyle? How then do we get to a point where we connect trading to our lifestyle? I got you. I'm gonna give you 5, 6, 7 steps on how you can connect withdrawal to your lifestyle. 7 steps. It will help you psychologically. It will help you beyond an abstract concept. 7 steps. I want you to declare to yourself that I will not leave this masterclass the same way again. Instagram, Facebook, YouTube, declare to yourself wherever you are that I will not leave this masterclass the same way again. We are about to go higher now. Wherever you are, make sure nothing is distracting you. I started by building a very simple structural foundation for you to get. When we started, what would I say? I made you understand that trading is a business you need to take seriously. And then we entered into a space where I started breaking down what withdrawals are. And as withdrawal psychologically is different from the technical side, right? So I said withdrawal psychologically is turning belief, or basically something that you cannot see, into a reality. All right. And then we started speaking about reasons why people cannot withdraw. And we said withdrawal sometimes don't happen for people because there are real reasons, whether the brokerage, the individual, and then there are technical reasons, whether the money is small or whatever, so on and so forth. And there are psychological reasons when it comes to dreams, and then, when it comes to illusions of numbers and all of that. We have broken down all of that down. And I'm telling you right now that there is a last part during the psychological reasons traders don't withdraw. And that reason is because that sometimes they have lifestyle disconnection. Lifestyle disconnection here is when your lifestyle, the current lifestyle, is everything opposite of what you want to use trading for. So when you cannot enhance your life with trading, subconsciously your mind don't believe you. You have heard me saying this before, that when it comes to the subconscious mind, it is one of the most important things, or the most important tools in your brain, part of the tools in your brain. Your brain operates like an OS. It operates like a operating system in a computer. It doesn't matter what you want to use the computer for. If the operating system is not structured in a way that can be able to help you to be able to become the person you want to become, you can't do certain things. So you need to be able to understand that withdrawal has a psychological reason why traders are fighting to withdraw. There is a real psychological reason for that, and I've listed some of them for you. But the most important one that I want to enhance this masterclass with is lifestyle disconnection. That you can see an average trader who cannot even afford 3 meals a day, and they want to just buy a house at once. How do you do that? Your brain does not even believe you. And I've told you this before, that just like the subconscious mind is in trading, the same way it is like a child. So I told you can find a child that will come and basically say, mommy, I want to be a musician. And the mother or the father will even buy a microphone to this kid and say, baby, take this microphone. Take this microphone. Why? Because the mother knows it's a child speaking. So even if this child grows, he will change, or she will change her mind. Here comes a child going into 18 years and comes back and say, mommy, I want to be a musician. Same mother that bought a microphone will now rebuke that teenager and say, what do you mean you will be a musician? All the money I've spent on your school, all you can do with your life is to do music. So what happened to the mother saying, okay, child, at the smaller age, and bought that child a microphone? Because during that time, the mother didn't believe. Same thing with your subconscious mind. Your subconscious mind is like a parent that doesn't believe you are becoming. So when you start being serious, when you start being serious too, it was like, don't worry, this guy, he's never going to withdraw. This guy, he's never going to become. But then that is where you push through. So day one, you said, I am becoming, and you are doing the things beyond abstract concept. Day two, you are becoming, doing things beyond an abstract concept. Day three, you are becoming, and now your subconscious side becoming restless. Man, this guy is serious. He's actually becoming. What do we do? Because remember, your subconscious mind is not bad. It's a defensive mechanism system to protect your mindset, your emotions, and your behavior. It is an automated system that makes you behave in a certain way. So if you currently right now, let's say for 15, 20 years, you are always complaining about how broke you are. And then a year later, you came across a masterclass, and the masterclass said you need to have a positive mindset. So now your conscious mind wants to be positive, but your subconscious mind is negative. So you keep on saying, my God, I want to become a positive person. And the subconscious mind will leave you for a day. Hear me now? Can you guys hear me now? What about now? What about now? What about now? If you guys can hear me, drop some ones in the chat. Okay, perfect. Let's continue. So I'm coming to give you guys a couple of few steps here that will be able to help you guys, for you guys to be able to understand this. So connecting withdrawal to your trading lifestyle, very important that you understand this. Step number one, what do you do? I want you guys to understand this. Step number one, what do you do? You need to write these steps very well done so that you can be able to get a concept. Step number one, what do you do? If you want to connect withdrawal to your lifestyle and trading to your lifestyle, I'm going to give you 7 steps. Step number one, you need to write down your current lifestyle. That is the first step. Because if you don't know your current lifestyle, you cannot be able to connect trading to it. If you do not write down your current lifestyle, you cannot connect trading to it. Very important that you understand this. So I want you to picture it this way. By the end of these 7 steps I'm about to give you, it's going to help you for you to be able to understand how to connect trading to your lifestyle. So number one, write down your current lifestyle, not your dream life, your real life. If you are a student, write it down. If you pay for transport and you need it to go to work, write it down. Food, data, books, write it down. Are you married? Write it down. Do you pay rent, utilities, children? Write it down. Are you single? Write it down. No, don't write it down. Because that one, you will never be sure. Yeah? I don't know. Because it's possible you are dating somebody, but the person is not dating you. So don't write that one down. That one, wait. Are you married? Write it down. Okay, do you pay rent, utilities, children expenses? Write it down. Are you a student? Write it down. You need to be able to define your current life. Okay, write every single thing that you do. I said this, I'm speaking to traders, but you can also use in your personal life. Write every single thing that you do. What do you do? What is your current lifestyle right now? What do you do? Write all of them down. That is a step now. Step number one, write down your current lifestyle. Write it all down. Not your dream life. I'm not saying that one has a place. It's called vision board. That is for another topic called the psychology of goals. We'll come there. We'll talk about the psychology of goals one of these days. But this one is specifically for those who want to be able to connect trading to their lifestyle. So we need to, first of all, see your lifestyle on paper. Don't think it, write it down. I am a student, and currently right now, I can't even buy the books needed. I can't buy, I'm not saying write your problems, write your lifestyle, things that you are doing, but needs enhancement. Let me correct that properly. I'm not saying write down your problems. I'm saying write down your lifestyle. I am a student. I am always paying for transport. I am always buying food with my own money. I'm always buying Wi-Fi for my business. I am always buying books. It's your lifestyle. That is how you are living. But you want to enhance it. I'm not saying write down your problems. I need this, I need this. And no, I'm not saying that. I'm saying write down the things you are doing now. That you are already doing them, but you need to enhance it. So are you a student? Write it down. Are you married? And so on and so forth. Now, step number 2, after you have been able to write down all the things that you are doing now, as in defining your lifestyle, you need to now group it into major expenses. You need to now arrange your lifestyle into major expenses. Things you're already doing, arrange them. So basic needs, responsibilities, and extras. Okay, so basic needs. You need to eat. You need transport, you need data, you need rent. When you go to the food, you can write down, oh, man, because of life, I'm only eating 1 meal a day. You are already eating, but it's just 1 meal a day. It's not like you're not eating at all. So group them. So number 1, you write down everything. Just write it, scatter anything that comes into your mind. Write it down. Then after you are done that, you go to the next page. You now group what you have written, not what you want to group, what you have written down. So now you group them: basic needs, responsibilities, extras. So the basic needs are the food, transport, data, rent. Those things are important. For me, having a Wi-Fi is a basic need. I need it. I need Wi-Fi. As a trader, you need it. You need the internet. All right? You need books to read. These things are basic needs. Then responsibilities can be family, school fees, bills. You write those things down. And then extras, probably, I don't know, subscriptions, whatever you have, outings, leisure, and so on and so forth. So step number one, you write down your lifestyle. Second step, you group the lifestyle, group into major expenses. Then step number three, after you have written down the lifestyle, and after that you have grouped them, the third step is to check your capital. How much do you really have? Not how much you want to have. How much do you really have? The money that you can deposit into your account, that even if you lose it, you are fine. How much? That is step number three. Step number one, write down your current lifestyle. Step number two, group them into major expenses. Basic needs, responsibilities, and then the extras. Extras like things that you can do without it, but you want to do it anyways. Then step number three, check your capital now. The amount of money you can put in your broker that you don't mind losing, that is the capital to trade. Because if you put a capital in your broker account that you cannot afford to lose, it's not a trading capital. No, it's not. You are not going to survive on that. Even if you are lucky today, what about tomorrow? Emotions, you can handle it. So money you are willing to lose. It can be $20, $50, $100,000, $10,000, $50,000, $100K is up to you. But you need to now assess yourself and check, okay. And you have to be brutally honest during that part. Then after you are done with step number three, step number four is assess your strategy. You now need to be able to define your win rate. Okay, what is my win rate? What is my average profit? You need to be able to look at a realistic projection in a week and in a month based on your backtesting journal. Okay? Based on your backtesting journal, you need to be able to look at the realistic projection. So step number three is check your capital. Step number four, assess your strategy. How do you do that? You need to be able to know your win rate, your risk-reward ratio. You need to know them not by ideas, but by data. Then after you have assessed your strategy, you need to now match to lifestyle. With the $100, maybe I can only make $20 per month. Realistically speaking, write it down based on the projection of your strategy. Are you with me? Are you with me? Okay, guys, I want to test something. Give me a second. Okay. So step number three, as I check your capital. Step number four, assess your strategy. Step number five, match to lifestyle. So now that lifestyle that you have grouped, you need to now pick up the one that is very important and then connect the one that is very important to the reality of your strategy based on the projection of how much you can make per week, per day, per month, based on track record. Now, that is what you're going to be using to be enhancing that area first before other areas. Are you with me? So you are basically treating trade like business now. So that is where your withdrawal should focus. That means when they ask you, what are you withdrawing for? It's not based on, I think this week I want to buy an ice cream. No, it's not I think. You need to know which one you are withdrawing for. So you need to know that, okay, the only one that I can do right now is to just add meat to my rice. Okay. I think I will focus on withdrawing just only back Cliff. But I want more. Relax. In this life, it takes time. It takes time not because of the time chronos. It takes time because human beings take a long time to accept the reality and go through process. At the moment you solve this problem first, automatically something will now start happening to the other part. So build that connection first and match to your lifestyle. So that is where your withdrawal should focus on. So which means if your lifestyle costs $20 to cover data and groceries and transport, use trading to enhance that either more or replace trading or replace those bills with trading money first. Are you with me? Good. Then the last but one, step 6 is build the enhancement habit. Every withdrawal, no matter how small, should solve one real problem in your life and then write it down.
trading paid for this. So in the next couple of few 90 days, we're going to be doing something. I want us to journal our journey like this. I don't know if you will do it, fine. I want us to really celebrate that at the end of the 90 days, starting from Monday. Write down, if you can, again, remember, there are realities why people cannot withdraw. So I'm not talking about that. If you can withdraw, if you can put some money in the brokerage, let's do this. Every week, every month, for the next 90 days, we're going to write down things trading paid for. Oh, trading paid for the ice cream. Trading paid for this. You will start to see what it will start doing to your subconscious. Right now, your subconscious might just believe this is just a game. Your conscious can believe it's not a game, but your subconscious mind doesn't believe you. So in the next 90 days, we need to create enhancement habits. Every withdrawal, no matter how small, you need to write down what you use it to solve in your actual lifestyle. Are you with me? Step number 6, build the enhancement habits. 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 Then the last step is over time, these small enhancements will grow bigger automatically. But Cliff, what do you mean? You see, I've told you guys before that when the farmer puts a seed under the soil, there are several things the farmer doesn't do anymore. Like it doesn't pray and say the tree will come out. By default, by automated systems, spiritually speaking, the seed must germinate to become a tree or a plant. Same thing with what I'm teaching you now. When something becomes part of your identity, it starts to happen progressively, and you start to see an upgrade in dimensions. So I cannot teach you and say, this is how you will become a millionaire. Being a millionaire is an identity based on a certain behavior and habits. The person behave in a certain way. They behave and talk in a certain way. You will start to see it. And while they start to do that, they start to attract certain things. So right now you don't have money. It's your reality. But then that reality can be upgraded by you going through a certain process. Are you with me? So the step number 7 is a transformation. Withdrawal is no more about you have now reached the last stage of the stages I told you in the beginning of the masterclass, the unconscious competence stage. You are now doing it naturally. So you don't withdraw because you want to spend the money only, but you are withdrawing because you are spending it and it's doing something to your subconscious. So these are the 7 steps that you can use to connect withdrawal to your lifestyle, practically speaking now. So after this, what do? You go and you sit down. You write down your lifestyle, detail it. And then you now group your lifestyle. Then you now check your capital. How much do I really have? If it's 0, wait there. If it's $100, connect that $100 to a real lifestyle structure that you can spend money on now. If it's just a 1 mil. Then after you have done assessing your strategy, of course, to know the trajectory and every single thing. Then you now match it to the lifestyle. Then you now build the enhancement habits. Then it now eventually becomes part of your identity. During that time, we call that a transformation period. So in the next 90 days, a little challenge. Practice withdrawal to do something to your subconscious mind so that you can be able to enhance to be part of your life that way. If you don't do this, remember, you are not trading. You are only playing a game. Because until the profit leaves your account, it's not money. What is it? It's not money. What is it? It's just numbers. So withdrawal is not just money leaving the broker. Withdrawal now becomes a bridge between illusion and reality. If your trading never connects to your lifestyle, you are not trading, you are only playing with numbers. The key is not to chase life, to change, like, oh my God, I want to be able to become this person. No, it's to enhance your trading. And the more that you are enhancing your trading, the more that is changing your life automatically without you realizing it. So somebody would say, hey man, you have changed. You're like, really? How? Because you were not focusing on changing it overnight. You were focused on enhancing your life. So ladies and gentlemen, withdrawal is part of this business. It's not something that you do when you have gotten the money you want. It's something that you do. It's a necessity of part of your business. If you don't do that, subconsciously speaking, psychologically, you will not be able to treat trading like a business. And so every single person that is here saying, "My Cliff, my money is small, I cannot withdraw." Remember, I already gave you a reality reason, and I understand and I feel you. But if you can be able to trade a certain amount of money to connect it to these steps that I gave you, you are the one that I'm talking to. The one that your money is small, I can also talk to you briefly, but the reality is nothing will change unless maybe somehow you get an amount of money. So if you are working, you can save for maybe 3 months and say, okay, if I now put $100, I don't mind if it becomes a tuition fee. And remember what I said about a tuition fee? A tuition fee is money you can afford to use to learn. So if all you have is $50 your whole life, you can't turn that into a lesson money. If you lose money and somebody tells you it's just a lesson, you'll be angry. And that is part of life. So ladies and gentlemen, by the end of this masterclass, one of my goals for you is that you can use this masterclass to connect withdrawal to your lifestyle, to let you understand that trading is your lifestyle. There was a topic I wanted to teach today, but I will teach it next week, God willing. I'm going to teach a topic. I don't know yet that if I'm going to still go with that, but I wanted to teach a topic titled mental noise. But this one came in very timely because I believe some people needed to hear this specifically. So if you learned anything on today's masterclass, anything that you can take home with you today, drop some number ones in the chat. Ladies and gentlemen, again, a quick one right now. Our TP Masterclass Ghana edition offline is coming live. We are almost picking dates. We are almost there. I will not tell, it's not like I will not tell you, but we have been able to find the month. So that means we are getting closer. It's going to be in December, God willing. But then we will tell you the actual day within December, so that you guys can be able to prepare for it. Also, as I said, we have a surprise for all those in Ghana, as well, the TP family in Ghana as well. So stay tuned. We will communicate effectively with you guys as well. And don't forget that, as I said, we don't have any Telegram channel. We don't have it. There is no Telegram channel on Telegram that says Cliff Cheqona. I am not the one in charge of it. Don't let anybody manipulate you. You can follow us on Instagram, Facebook, TikTok, and so on and so forth. With that all being said, thank you so much for today, for hopping on. If you learned anything today, I appreciate you. God bless you all. And I will see you guys, God willing, next week. With that all being said, thank you and take care. God bless.
Trading is a mind game.